All right. Hello, everybody. Welcome to the official Tesla Q1 2024 earnings live stream. This is going to be a very, very exciting one. This is one that I think we all have been looking forward to. And today is going to be the day where we have to analyze what happens in terms of the trajectory with Tesla. A lot to break down, a lot to discuss. We have 30 minutes until we get the numbers. And then we will be breaking down what those numbers mean and what it looks like for the future of Tesla. So thank you, everybody, for being here. I'm here today with a good friend of mine, Mr. Couch Investor Neil. What's up, man?
Good. How are you? I hope the mic is a bit better, but
I think just lower the gain. That's all.
Yeah, maybe let's do that.
Yeah, if you lower the gain, I think it'll be perfect.
What about now?
A little bit more lower. Just a little bit more.
No, 1, 2, 3, 1, 2,
That's
3.
perfect. That's perfect. That's perfect. Let us know in the chat if it's not good enough. That's perfect. That's perfect. Okay, awesome. Neil, I think we'll have Carlos joining in a little bit as well, but we're going to analyze what's going on with Tesla. So, Neil, before we get started, let me show you something real quick. I have made a bet in the derivatives market just 20 minutes ago for some call options for Tesla at $185 strikes expiring this week. I spent $30. Given you've been a shareholder since how long of Tesla?
August 2019.
Okay, so you've been in here for a long time. Do you think my derivatives bet in the capital equity markets to get Tesla to 185 by Friday is a good bet based on what we're going to get in these earnings?
I mean, since you've put that much money in it...
Dude, $30 is a lot of money, dude. That's like a cheap date. That's like a decent amount of money. My God.
Yeah, especially these days.
Yeah, especially these days with inflation.
Yeah. I mean, $185. it would be like the ultimate reverse Uno from Tesla and Elon Musk, because everybody has now probably placed bets that it goes to 100, maybe. I don't know. Lower.
Everyone is bearish. So, Neil, I got a lot of questions to ask you, but real quick before we get into it, one breaking piece of news I want to tell everybody. Tesla just seems to have cut another 2,000 employees at their Fremont, California location. We know they cut the advertising team the other day, and they cut 14,000 employees a couple of weeks ago or last week. Today, Tesla terminating 2,267 employees in Fremont, California. So let's start off the conversation here, Neil. You've been a Tesla investor since 2019. You know the company better than most people. What are you expecting going into these earnings, and what do you think Elon really needs to do for the stock to not go more down than it already is at 46% down year to date?
Yeah. So, I mean, I did make a couple of predictions. I think it was your post. So I like to hear progress on the Tesla Semi and the 4680s. I think the cells. I think we've been quite disappointed with regards to the progress. With regards to the Tesla Semi and the 4680, we know the technology, I mean, to reach the ramp stage, etc., we knew it's going to take a while, but then again, communicate it better. Because, I mean, promising, later this year, we know Elon and timing is not the greatest, but still, I'd like to hear more info on that, seeing if auto margins are better than expected, or if they are seeing some promising signs. I know we've recently had more cuts, right, in China, in the United States. So probably the margins are going to get hit unless somehow they figured out to cut costs even more. Materials are cheaper than before. So let's wait and see. Then my big bet is him saying, or at least someone from the team saying, FSD take rate has gone up significantly. Mm-hmm. I think that would definitely bring the stock up a little bit, but maybe not that much. 4 is also a big one. We still plan on making the compact car despite huge progress in autonomy. That would definitely...
Okay, let's talk about that. That part is you were commenting all the different ways the stock doesn't tank under my post, but that's the one I want to focus on. So the entire street has basically decided that this M2, based on this Reuters article, which kind of was wrong, but also kind of wasn't wrong, is being scrapped. Meaning the $25,000 car isn't necessarily happening. Maybe it's happening, but not on the same timeline that the street thought it was going to happen at. Dan Ives, one of the most bullish of bullish Tesla bulls, basically said, look, if the M2 is not happening and it's only robo-taxis, this is a nightmare. He's obviously going to downgrade the stock, and he might end up leaving the story. Do you think the M2 is going to be scrapped? And if it's not scrapped, how do you think Elon's going to navigate the communication around the M2 versus the robo-taxi?
Well, if it's not scrapped, then just say it's not scrapped, and then it's over. I know maybe because it's earnings and he couldn't have said it on Twitter, even though I do still think he talked way too much before an earnings, which I don't know. I don't know how all the rules work, but he was a bit vocal. But it's a big deal because in my opinion, my thesis, I mean, if there's no mass market affordable EV, it's a big change. Because I know, I mean, in the United States, fine, autonomy, there is already Waymo, there is Cruise, Tesla FSD, supervised, etc., fine. But I mean, across the world, until you reach a huge scale, it's going to take a long time. We know Europe loves regulations, so that's already one huge market for them. FSD in China, let's wait and see until there is FSD supervised in China, and then a wide release could be a couple of years. So you're losing so many years if you scrap the compact car. Despite the success of an autonomous vehicle, you are losing quite a lot of potential if you just scrap the compact car. Because in many markets, huge markets around the world, I don't see an autonomous car anytime soon, if ever. I mean, India, Rome, plenty of other cities, towns that will never have autonomous vehicles.
Right. Let me show you this clip by Ed Ludlow, who reported something on Bloomberg yesterday. This is the one way I think Elon maybe navigates the communication around the M2 versus the robotaxi platform. Let's get his thoughts for a minute, and then I want to know what you think of that.
That the focus.
Let me turn the volume up. Okay.
Musk himself has directed that the focus be on a purpose-built robotaxi. My understanding from sources is no, the $25,000 EV is not cancelled or scrapped, but it's highly misunderstood. And the relation between the two of them, a robotaxi and a cheap EV, is that Tesla can't do both in parallel, apparently. So the way it was explained to me is that Tesla has done a lot of work, both on the components that go into a $25,000 EV and the production method of how it's built. And that work was always destined to show fruition in late 2025. But how it manifests itself is not some kind of standalone cheap single EV model. What they'll do is take that work now, based on the new emphasis on robotaxi, and put it into their existing lineup, Model Y, Model 3, and future iterations of it, and lower the price on average of their EVs through that method.
What the hell does that mean, Neil? What is he talking?
So it's basically the next generation platform that everybody's been talking about, that Elon's been talking about as well. Bringing manufacturing of cars to the next level, something nobody has ever seen, which would make making cars faster and more efficient. So you could have a next generation platform with robotaxis, model compact car, refresh Model Y that will cost less because of the unboxing method to build the car, and future iterations of models. Because I know one of the big, let's say, dislikes of a lot of people that look at Tesla's models, like everything looks the same. We feel it's the same car over and over, even though the refresh Model 3, in my opinion, is pretty neat. But yeah, that's basically it. The next generation of Tesla cars are going to be on the next generation manufacturing platforms, which should allow them maybe to have more models. And I mean, if you look at the Chinese, right? Since every week they come up with a new car.
Yeah,
it's crazy. Everyone there is like popping cars like it's babies.
Yeah, and I think the street's going to have to figure out, do they believe that that's an idea that's convincing enough for them to get on board with this? This is something we got posted today. Tesla's officially launched the new Model 3 Performance. Do you think this matters today on a day like this? Is this relevant, or is this just something they eventually have to do?
It's a higher price tag, so that's nice. So it's probably the same platform, because it's the first time, if you look at the front, it's different than a normal Model 3. The front is different. It's more sporty.
Right.
So if they can do that now, and maybe it doesn't cost them that much, or the change in manufacturing isn't such a drastic change, maybe that's a little introduction of what we might expect for the upcoming models in the years ahead, for example.
Right. Okay, so we've got this basically, I don't even know if it's a pseudo pivot or a real pivot to robotaxis. You got Elon right here. Well, let me play this 1-minute clip by James talking about AI. Then we'll listen to Elon's comments, and then I want to ask a question about this.
Coming down the line and how much compute and data, everything going forward, that they just must be really excited right now, I think, just to see the level of, of improvement, especially with the latest FSD.
12.3, it was still it was a 2023 build. I mean, you could tell from the firmware number, right? And generally what we saw through V11, right, was that the things that were getting in customers' hands were 3, 4, 5, sometimes 6 months old, right? So Tesla's already looking at the one we're going to get in 6 months. So, I mean, they may, why does it take them 6 months? Well, they do all this testing and validation. There's tweaking. There's all these waves of rolling it out to be super safe and whatnot. So the pipe is deep between when they first, they're going to know the potential.
Yeah.
When, the first couple of weeks after they do those initial builds. So, they already mostly know what we're going to have in 6 months. And so they don't really have to guess, right? We just, it takes 6 months for it to get through the safety pipe and everything and get to us.
Yeah.
So Elon comments under that, James is largely correct. We know roughly what the car will do in 3 to 6 months. When a more advanced AI model is trained, it will have several breakthroughs, but also dozens of bugs. It takes a few months to fix those bugs. So my question to you, Neil, is that Elon has self-proclaimed himself as the boy who cries FSD. Even if 12.4 is theoretically 13 or 13.1, and it is getting close to unsupervised autonomy, do you think he's going to try to say that unsupervised autonomy is very close to get the street on board with the robotaxi pivot, which, I mean, when he says balls to the walls to autonomy, we know that's kind of what's going on? Or do you think he's going to be more realistic and say it's a couple of years out? And how do you think the street's going to react to what he says about this?
So I don't think he can say now a couple of years out because of everything he said before. But it makes sense that they know, of course, what will happen, or at least they think they know what will happen in 3 to 6 months with regards to the software that the wider public will get. But remember, V12 was supposed to be V12, not supervised, not beta.
Right.
We're now 12.4 closely. It's still supervised-ish.
Right.
So, yeah. I mean, I hope he answers questions directly and doesn't like go off the path like he usually does, and starts to talk about what might happen in maybe 10 years time, because the street has a lot of questions. Even retail has a lot of questions on some good questions this time. So yeah, hopefully he answers the good question. Hopefully he's not like super futuristic, because we know Wall Street is like 6 to 12 months out. And yeah, the near-term things are more important right now. Seeing all the margins come down, macro staying higher for longer with interest rates, etc., etc. Robotaxi, no robotaxi, compact car, no compact car. So yeah, we'll see. Maybe he says something about advertising as well, because we know that team.
Why do you think he fired the advertising team yesterday?
I think he noticed there was a 40-person team in advertising. And maybe he was like, okay, what did they do? And then he watched the footage and he was like, okay, what the heck is this? It's garbage. You're out. Because if you watch those videos, it's horrible. It's videos for engineers, not really for customers that want to buy a car.
Right.
So yeah, maybe they'll hire a marketing officer. I don't know.
Dude, this is going to be exciting. So let's start the official poll in the chat. Let me ask the question. And the question is going to be pretty simple. Nothing too complicated. Does Tesla tank after earnings? So that is the question. Does Tesla tank after earnings? It's a simple yes or no. I think to make it fun, I mean, let's do your guesses with the stock price on whatever it is, and I'll give a $25 Amazon gift card to whoever gets the closest. So put a stock price, yes or no. If you think it's going to go up, say 160, yes. Or say 132, no. And we'll try to filter through the comments. I'll try to find the earliest one I see. It won't be perfect, but I'll try to find somebody, and we'll get you guys a $25 Amazon gift card. So let's see what people think. Neil, what do you think the price is going to be after earnings, and do you think it goes up or down?
Good question. I will give you an answer now, then I'll give another answer probably after we read the earnings report, before the earnings call, because everything will change quite quickly. We know that the numbers are going to be bad. So at first, it's probably going to tank, let's say 5-6% or so. Even if it tanks 10%, we're going what? It's up 2% today, which is also quite weird. So we go straight to 130.
You think 130? You think we go to 130?
I think 130, and then earnings call, we might go back up.
Okay, so why do you think it pumped this morning? You think this is a little bull trap right here?
I know the whole market is green today, so which I mean, I'll take what I can get, especially after last week. Yeah, it's weird, to be honest. I don't like it. It makes me quite uncomfortable
I
seeing
think this
so
is
much
such a
green.
bull trap. Yeah. I think this is fake. I know the market's pumping, but I think this is fake. I don't know who's buying Tesla before. Well, okay, let's get your perspective on this. What do you think about Cathie Wood buying $17 million worth of Tesla yesterday? I mean, to me, it's like you at least wait a day if we all know it's going to be bad. Do you think she's making the right contrary bet, or do you think it's just bad risk management here?
Did she buy last week as well?
She bought last week, yeah, 155.
Yeah.
She bought last week.
I know she does it quite a lot of times, right? Buying just before the earnings instead of waiting. But then again, it's an actively managed ETF, so even if it drops more tomorrow, I guess she can sell some more Coinbase or I don't know, some other positions to buy more.
Yeah.
But there have been some weird moves, right? With ARK Invest in the last 3 years now.
Yeah.
Buying stuff at all-time highs, then selling them at all-time lows to buy more weird stuff. But I mean, they did well with Coinbase.
Well, the fund has lost $2 billion. The Wall Street Journal reported this year. They had $59 billion in 2021. Yeah, now $60 billion. Tesla was their winner, though. Tesla is the thing that gave Cathie Wood her name, and I think they're still riding it because they believe in that overall story. Do you think the $2,000 price target they have set up in 5 years is realistic? That would be about $5 trillion in market cap.
Is it 5 years? Or now is it already 3, like 2027? Is that
maybe it's 3 years? Maybe it's 3 years.
Yeah, I mean, I don't know. It's you can play around with it, right? Because it's an open model, but it's quite strange. I mean, it's the same weird price tag that they give for Zoom, for Roku, like $1,600 or something. It makes zero sense. It's like Michael Burry, right? He had one good call in 2008. They made a movie about it. It was great for Hollywood. And then he's been quite wrong, I think, 9 times out of 10.
Yeah,
so I call, Cathie Wood's ARK Invest. They have some good research, which is free to read, so that's always great. So
I would agree.
Yeah,
I would agree. I'm getting everybody's guesses again. Put in the chat. The winner will get a $25 Amazon gift card. YouTube saves the live chat, so I can go through it afterwards to try to find the exact person. But up or down, and what stock price, and whoever gets closest to it. So if it goes to 134, which means it goes down to 134, if someone put that in the chat, I will reach out to you. And also my DMs are open. If you know you got it right, like YOLO Frank, if you know you got 134 right, then just DM me on Twitter and I'll make sure you get the gift card. Neil, we had someone else who built his name off of Tesla. And look, in the fund management space, right, investing, you build your name off a company. You attach yourself to a company and you build your name off of it, and you put your ass on the line, and either it goes up and people love you or it goes down and people hate you. It's a ruthless fucking game when it comes to investing. And you don't build a name if you bet on the index, right? You don't really build a name. So you have to try to bet on a company. This guy bet on Tesla, made a lot of money. This is what he says today. I will be voting no on everything on the Tesla proxy. No friends and family on the board of directors. No obscene pay package after destroying $600 billion of Tesla value. No moving to Texas to avoid shareholder governance. 2 questions. Number 1, do you think Elon should get the $47 billion pay package? Number 2,
56.
Or 56, yeah. Number 2, is Ross Gerber high out of his mind?
First of all, thank God he never got even a toe on the board of directors. Second of all, I believe James Stevenson found a clip of him very, very happy with the compensation package. There are plenty of tweets out there. I retweeted tweets from him, from Gary Black, which has also made his name thanks to Tesla, even though it's by far not his largest position. So yeah, Ross is a flip-flopper. What he called Palantir a Nazi type of company or something like that. No, not so long ago. And then he bought shares, which is also so. Yeah, a snake. It's basically it.
Yeah, and I like the biggest problem I have with this. You can be bearish on a company even if you make money after, right? If you don't believe in the company, but it's the sort of a obscene nature of him having a particular agenda against Elon Musk. And it's like, dude, Ross Gerber would not have a name. He would not be managing $2 billion unless he got that early bet on Tesla right. And you got it right. You don't want to be invest anymore. You don't want to be bullish. That's fine. But these guys want more attention, so they're going to keep talking about it, even though they're objectively not adding a lot of value to the conversation. And then here's a question. Elon worked his ass off to 10x the company from 50 billion to $1 trillion to get that compensation package. even though the company has lost $600 billion in value and maybe loses another $100 billion in the next 2 months before the shareholder vote, does he deserve the compensation package again, given it was struck down by the Delaware judge?
Of course. I mean,
Why is it so obvious to you?
Because imagine if he does not, then you set a precedent for every other compensation package for every company out there. Shareholder voted, which basically means that all the shareholders that voted for that, their vote doesn't count. Imagine you vote for a president or whatever, and suddenly somebody comes and is like, oh no, sorry, your vote doesn't matter, go away. Everything that has been done is actually for nothing. Makes no sense. The guy didn't even take a salary, got basically nothing for all of these years, despite shareholders making 10x returns if they didn't sell, of course. Then, by the way, it's 10x plus the company did reach $1 trillion, so you probably made even more if you sold at the highs.
Right.
Maybe you can't time it, but fine. But it's a question of principle. All the shareholders, not all, but the large majority voted yes. The guy didn't take a salary, nothing, worked his ass off. Company did the unthinkable, and now a judge says, actually no, and that's all because a guy with 9 shares actually started this whole thing. It doesn't make any sense. It doesn't make any sense. Plus, we're not even talking about the next compensation package because
and one thing about the
compensation works for free.
Right. And one thing about the compensation package is that Elon doesn't. Elon can't sell for 5 years. At least that's what I was reading. So it is very aligned with shareholders. I think the existential question that you pointed out is that if Elon doesn't get paid, he's going to leave, or there's a good chance he leaves. And if he leaves, I think no one believes anyone can bring out the Tesla vision to the $10 trillion of market cap it could potentially get to, besides Elon.
No, if he leaves, I'll probably cut my position by 75% or so, because he will probably take away also quite a lot from the company, which has not materialized yet. So I mean, why should I stay? Doesn't make much sense. And again, shareholder voted. It's not like shareholder didn't know what happened. They didn't vote. It was only Elon and his brother and his friends. No, 70+% voted yes. So I mean, it's a crazy thing. And going back to the flip-flopping, it's pure about attention. Purely about attention. If they wouldn't have a chance to get in front of the TV, they would have never tweeted out that much.
I agree. We got a lot of people in the chat saying that they agree that they would sell if Elon leaves Tesla, and I think a lot of people would agree with that as well. The poll is there. So does Tesla tank after earnings? Right now we have 635 votes. 64% say yes, 36% say no. Here's another question for you, Neil. Usually the stock market operates against the herd, meaning when people think one way, the opposite tends to happen. And there's probably a statistical sort of significance for why this is the case. But it's also kind of just like, it just is what it is. It's the mystique of the stock market. The opposite happens. Everyone's bearish. There's 20,000 put contracts open for $100, which I don't think is going to $100. That's expiring on Friday. Mm-hmm. Do you think we get a bounce because everyone's so bearish?
Well, if Elon knew about that, he would probably do everything he can during the earnings call to blow those contracts up. But I mean, it's true that if everybody thinks one way, then suddenly it goes the other way for some very, very strange reason. But sometimes it goes where the wind blows. Because we know it's a bad quarter. We know, I mean, even Q2 hasn't started great in China, plus all the price cuts. So plus the vote in June.
Oh boy, this is going to be exciting. All right, folks, we got 5 minutes. Put in the chat, just because I'm curious. And also, if you're on Neil Stream on Twitter, if this is your first time tuning into any of our pieces of content, put in the chat and let us know. If you just saw this video randomly click on your feed, if you're on Twitter, you saw it randomly click on, and you decided to jump into the chat, let us know. Put in the chat. Always curious to see who's new and who's joining. 5 minutes left. How substantial is your Tesla position? How big is it compared to your portfolio?
20s now with the recent drop, 25%.
Let me put this comment up real quick. Derek Wall, good friend of the channel, my channel, he says he just doubled his puts. So for those that don't know, Derek has bought puts since it was 187 or 178. So obviously those puts have gone up as the stock price have gone down. He just doubled on his bearishness. And so we'll see how this turns out. So your part of the portfolio is 25%. If Tesla was to drop another 15% today, do you think it would affect your psychology or mindset? Or as a long, and this is good for the longs in the chat, would you just double down not on your puts, but on your long position?
Well, it depends on what gets mentioned in the earnings call, of course. If there is no compact car, if that's what he announces, I'll wait a bit, because I mean it's a huge change in my opinion, because that's the mass market car for them, which again, in my mind, I don't think they will ever cancel such a thing, because it just doesn't make any sense. If you want to accelerate the world to a sustainable world, it makes no sense to cancel a mass market car. But if it happens,
if they did cancel that car, you would be scared to double down on your position, is what you're saying.
Not scared. I would purposely not double down directly.
Okay. So, and you're a very big Tesla bull. So if you're telling me if the M2 is gone, meaning not gone, but like, let's just say it's pushed off to 2028, which basically is gone. I mean, in the next 4 years, you know,
it's a big deal. Yeah.
Yeah. But what would cause you to sell your position? We got 3 minutes, folks. What would cause you to sell Tesla today after this earnings report?
Today, other than Elon stepping down, nothing.
Nothing.
Yeah, no, today, no.
Okay, this is going to be fun. We got 3 minutes, folks. This is literally live time sports. That Lakers game, by the way. Oh, man, that was a tough game. I don't know if anyone saw, but this is going to be
I didn't see what happened.
Jamal Murray hit a game winner, dude, and it was just like, it was a tough game winner for them. The refs didn't call a fucking foul. It was like, it got. But like, this is like sports for us, right? In terms of earnings.
So close. Wow.
It was very close. Body says, what are your revenue expectations? So here are the official expectations. Revenue, the street is expecting 22.34 billion, which is down from 25.1 billion last quarter. And EPS, they're expecting 0.51 cents a share, which is down from 71 cents a share last quarter. And those are going to be the numbers. Neil, do you have any specific
No,
numbers?
But the thing is, they can recognize more FSD revenue if they wanted, just to boost this quarter, because there's still quite a lot to recognize. Second of all, the lower the stock goes, the more shares they can buy back if they announce a share buyback, just to please Wall Street.
Correct.
Because they have, what was it, $30 billion in cash or something like that? Can't remember the exact number. So there's plenty of cash to use now that the stock has gone down as well. But yeah, we'll see. They're going to need some more cash, because I think this year and next year expenses are quite higher than expected, 10 billion or so. Then they're going back to the 7 to 9 billion. But
right.
Yeah, I mean, building a factory in Mexico is not cheap. Probably building one in India is not cheap either, but let's wait and see what happens with that.
All right, we got 40 seconds till the results. Thank you to Mr. Derek Wall, very, very good friend of mine and friend of the channel. He just gifted 50 memberships. I have a bet with Derek that if Tesla stock is red by tomorrow after the closing price, I have to buy him a physical share of Tesla. So he basically just gave me the money to buy a physical share of Tesla. You guys can click on those memberships. It's a $5 a month membership to the channel. Derek just gave it to 50 people for free. Thank you so much, Derek. Means a lot. I think he's giving some sympathy money because he knows I'm going to have to buy him this stupid share. And in 20 seconds, folks, we are going to find out the trajectory of Tesla. It might take a couple minutes for them to post the deck. Or they might put out the deck immediately. I'll have the deck loaded up, or I have the investor relations loaded up, ready to go once it comes out. And we will see. Here we go. I will ring the cowbell. Here we go. It's 4 p.m. The market is now closed. Okay. Oh boy. I don't even have a huge Tesla position, but my heart is like beating. I did buy some call options today. I played in the derivatives market, and so I do have some on the line.
Yeah, it's a big week for me. I have Meta tomorrow.
That's right.
Yeah.
This is a big week for
This is
a big week for tech in general. All right, so we're just going to stare at the stock, guys, for a little bit until we get the numbers. This is just what we're going to do. We are like that. We are part of the 1% of the planet that cares about financial freedom. And so to care about financial freedom, you have to get some of these bets right. And so when you want to get some of these bets right, you have to stare at a stock and see what happens after hours. All right, so it's up a little bit after hours, nothing crazy until it moves 1% or 2 to the upside or downside. I don't think it matters too much. Being very volatile right now. It's going between red and green. It's like Christmas right now. Red and green, red and green, red and green.
Red, green.
It's red. It's red. It's green. You know, it's green. Oh boy, this is going to be crazy. This is going to be crazy. All right. So Sean in the chat says, forget financial freedom. This is about yacht money. Yeah. Let us know in the chat as well how big your allocation is to Tesla. So you can put a percentage like 40%, 30% of your portfolio, 10%. Let us know if there's people that really do have a significant position in this company. Earnings are not out yet. Just to remind people, deliveries in the first quarter were 387,000. These are the lowest deliveries since April of 2022. So deliveries were announced about a month ago, and It was the lowest, and that'll impact the numbers. Neil, what did you think about those delivery numbers when they came out as well?
I mean, I had them low, but not that low, and the explanation was also not that great. So yeah, there is definitely a demand problem. We've seen that with Volkswagen, Mercedes, BYD. There's definitely a demand problem with regards to EVs. So yeah, there is that. But production was actually quite good. So they can play, of course, now they can play around with pricing to deliver more cars. But well, when the thing with Tesla is that it's direct to consumer, so every price change messes with your mind as a consumer.
Right.
With dealership model, you don't know. You
Right.
don't know if the dealership has pumped the price up or down. So yeah, something we have to keep in mind. But the deliveries were not great at all.
Yep. We are still staring at the numbers, folks. It's slightly green again. This is a little boring because the numbers are not out. But as soon as you see a move to the upside or downside, you will know the numbers are indeed out. And then we will see what happens after the earnings. I think the other thing that's really interesting about this delivery number being the lowest it's been since 2022 is that in Europe, Tesla registrations were down at a 16-month lows in March. And in China, they did price cuts. And in Europe and in the States, they did price cuts. So obviously there is a demand issue. Any thoughts, Neil, on why they're doing price cuts and why consumers aren't buying? Oh, hold on. That's a big green. That's a big green. That's a big green. Where are we at? We're up 2% after hours. All right, let's see. Now it can go red any second.
Yeah, still have nothing.
That's a little bit of a. It's trying to go green. All right, we're green 4%. That's decent. We're green 3%. We're green 3. It's fighting. So initial reaction is green. Now that can be a head fake. That's happened many times on stocks where initial reaction is something. Netflix popped to like 670, then it went down to 530.
Yep.
But we do have green. So the algorithms are using natural language processing, the high frequency trading algorithms, to dissect every last letter that has been crossed through the Bloomberg terminal of this earnings. And they are trading based on this.
That's why I like when they only put pictures in earnings reports. The system can't read pictures.
Right. Okay, it's not out yet. So again, the algorithms are getting a hold of the earnings and they're taking it higher. It's up 5%, but we don't know if that initial reaction is going to stay or if that initial reaction is going to get hit. Report is out. Okay, I don't see the report on my end. Neil, if you see it, let me know. I don't see it on my end. If anyone sees it, put the link in the chat. Sometimes it's very hard. It's up. It's green. I'm not going to get super excited yet. It's up 7. Oh, wow. 7% is a lot.
So
7% is not bad. 7% is not bad.
Something interesting.
It's something's in some. They have 8%, baby. 8%. They announced something. Now it could fall very quickly. It doesn't have to stay up. Okay, we got Marcel in the chat. EPS 45 cents. That's a miss by 6 cents. Oh my God, they missed by no. They beat revenue by about 300 million. They missed EPS by 6 cents.
Okay, it's up. You can hard refresh your page.
Tesla investor relations. Yeah, here we go. All right, folks, here we go. It's time to stop looking at the stock and time to start looking at the numbers. Here we go. We're going to take it slide by slide and see what they got. Try to get those top line numbers and keep going. Summary. First, profitability. 1.2 billion GAAP operating income in Q1. 1.1 billion GAAP net income. They made $1 billion in profit. 1.5 billion non-GAAP income in Q1. Operating cash flow of 200 million. Free cash flow of negative 2.5 billion. They spent $1 billion on AI infrastructure. That seems to have created the negativity there. And 2.2 billion decrease in our cash and investments. So they went from 30 billion in cash to about 27 billion in cash. Summary. We experienced numerous challenges in Q1, from the Red Sea conflict and the arson attack at Gigafactory Berlin to the gradual ramp of the updated Model 3 in Fremont. Excluding Cybertruck and unscheduled downtime, our COGS per unit declined sequentially. That's good. Driven primarily by lower raw material costs. Lithium is down 80% year over year, so that makes a lot of sense. Global EV sales continue to be under pressure as many car makers prioritize hybrids over EVs. Wow.
Yep.
While positive for our regulatory credits business, we prefer the industry to continue pushing EV adoption, which is in line with our mission. To support our growth, we have been increasing awareness and expanding vehicle financing programs, including attractive leasing terms for our customers. While many are pulling back on their investments, we are investing in future growth, including our AI infrastructure, production capacity, our supercharger and service networks, our new products infrastructure with 2.8 billion of CapEx in Q1. We recently undertook a cost-cutting exercise to increase operational efficiency. Those are the layoffs. Ultimately, we are focused on profitable growth. The future is not only electric, but also autonomous. We believe scaled autonomy is not only possible with data from millions of vehicles and an immense AI training cluster. We have continued to expand both to make FSD more accessible by reducing the prices.
Wait, go back up. The operations one with the training compute.
Increased AI training compute by more than 130%. That's amazing. Record energy storage deployment of 4.1 gigawatts in Q1. That's amazing. Produced over 1,000 Cybertrucks a single week in April.
Okay, that's good.
It's pretty amazing too. Where's the stock? I haven't looked at the stock. Wow, it's up 5%. It's still maintaining the 5%. It's still maintaining. It's still holding up. It's still holding up. Okay, revenues. Total revenues in Q4, 21 billion, which is better than what the street thought. 1.4 billion in energy, 2 billion in services. Or sorry. Yeah, I read it wrong. 1.6 billion in energy, 2.2 billion in services, 21 billion total. That's down 9% year over year. So that's not the best, but I mean, 21 billion is no joke. Yeah, it's still no joke. Automotive was 17 billion. So gross profit was 3.6 billion. That's down 18% year over year. I'm curious why the stock is up. There's got to be something else. There's got to be something else going on. Total GAAP gross margin is 17.4%. That's down 199 basis points. So that gross margin, as you guys can see right here, went from 19.3% 5 quarters ago to 17.4%. That's better than GM, right? And all these other guys, but it's not what the street needs. It's not what the street needs.
Expenses are even higher.
Wow, yeah. Look at the expenses. Operating expenses, 2.5 billion versus 2.3 billion. That's up 37% year over year. Income from operations is down 56% year over year. Neil, why are you smiling right now?
I'm looking at operating margin at 5.5%. I mean,
dude, why the fuck
have fallen?
Hold on. How is this stock? All right, the stock's starting to calm down. It's up 4%. The stock is up the same amount as their operating margin right now, dude. That's like
just that EBITDA margin is up quarter over quarter, by the way.
Okay, that's that's down 21% year over year. Well, year over year, it's up. Yeah, year over year, it's down. Okay, what else do we have? Total revenue declined 9% in Q1 to 21.3 billion. Reduced vehicle average selling price. Unfavorable impact of mix. Decline in vehicle deliveries, partially due to Model 3 update in Fremont. I don't know if that's the best excuse. Negative FX impact of 200 million. Growth in other parts of the business. Higher FSD revenue recognition year over year due to increase. I'm curious what the FSD revenue is. I don't think they break that down. But that would be nice to know.
Maybe let's check.
Okay, let's go to some other stuff. What else are they saying? So we already know about the deliveries. What are you guys thinking in the chat? Tesla's up 5%, dude. Why is it up? Does someone know in the chat why is it up? Can someone tell me?
Okay, if we go down, there's more new graphs, I think.
Okay, we're but let me know in the chat. What do you guys think? Why is this thing up? So artificial intelligence software and hardware. Let's read this. We have been investing in the hardware and software ecosystem necessary to achieve vehicle autonomy and ride-hailing service. We believe a scalable and profitable autonomy business can be realized through a vision-only architecture with end-to-end neural networks trained on billions of miles of real-world data. Since the launch of FSD earlier this year, it has become clear that the architecture long pursued by Tesla is the right solution for scalable autonomy. To further improve our end-to-end training capability, we will continue to increase our core AI infrastructure capacity in the coming months. In Q1, we completed the transition to hardware 4.0, our latest in-vehicle computer with increased inference processing power and improved cameras. A lot of fancy words, but I don't know if that necessarily means the numbers are going to get too much better. We've rolled out FSD with a 30-day free trial. We released Auto Park to existing customers. We are currently working on ride-hailing functionality that will be available in the future. Like, again, this in the future thing, like, what does that mean, right? We believe that Tesla software experience is the best in class, okay? Batteries, 4680 ramp batteries continue successfully in Q1 and continues to stay ahead of the Cybertruck ramp. Costs continue to come down and sequentially as scrap yield and production rate improved. Our non-automotive business is becoming an increasingly profitable part of Tesla as Megapack continues to ramp and our fleet continues to grow. We are expecting consistent profit growth on our non-automotive business. That's good growth. It's about $4 billion in profits, almost gross profits on non-automotive parts of the business. Tesla right now up 6%. It's still up 6% from here. Volume. Our company is currently between two major growth waves. The first one began with the global expansion of the Model 3, and we believe that the next one will be initiated by advances in autonomy and introduction of new products, including those built on our next generation vehicle platform. So again, stressing this potential robotaxi platform. In 2024, our vehicle volume growth rate may be notably lower, same vocabulary they used last time, than the growth rate achieved in 2023 as our teams work on the launch of our next generation vehicle and other products. In 2024, the growth rates of energy storage deployments and revenue in our energy generation and storage business should outpace the automotive business. What do you think about that? They're saying energy is going to grow better than automotive.
Yeah, it's the same language they use every time.
Okay.
But there is more on that page, which might be the reason why people are happy.
We have sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. While we continue to execute on innovations to reduce the cost of manufacturing and operations over time, we expect our hardware-related profits to be accompanied by the acceleration of AI. We have updated our future vehicle lineup to accelerate the launch of new models ahead of our previously communicated start of production in the second half of 2025.
Mm-hmm.
Oh shit. Is he dropping the hammer? Is he dropping the freaking hammer? These new vehicles, including more affordable models, will utilize aspects of the next generation platform as well as aspects of our current platforms and will be able to produce on the same manufacturing lines as our current vehicle lineup. This update may result in achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes in a more capex efficient manner. During uncertain times, this would help us fully utilize our current expected maximum capacity of growth to 3 million vehicles, enabling more than 50% growth of 2023 production before investing in new manufacturing lines. Our purpose-built robotaxi product will continue to pursue a revolutionary unboxed manufacturing strategy. Neil, do you think that's why the stock is up?
Yeah, because everything else sucks. But yeah,
the rest are just some pictures. That's it. That
some
one
nice
paragraph.
Pictures of Dojo, by the way.
Where's Dojo?
This one.
This one right here.
Not a render.
Not a render. Wow.
Pretty neat.
Pretty neat. Okay, so guys, that we read all of that to come to that last part right here. These 3 paragraphs. That's it. That is why the stock is up. That is why the stock is up. Where's the stock right now? 7%, Neil. Holy crap.
I mean, if you read it again out loud, it's second half of 2025 is 1 year from now, right? Which means earlier than that.
That's earlier than that. That is correct.
Earlier than that, they don't need Mexico, it seems. Clearly, he doesn't really feel he needs India anytime soon. That's probably also one of the reasons he postponed the trip. Or maybe he just forgot he had an earnings call, but okay. But yeah, it's very interesting. I had a dream last night that they would drop the new model today. Well, they dropped a new Model 3, but definitely not a compact car. But this is as close as it gets.
Okay, but the question is, like, what do they mean by this? Are they just putting this out to put, like, what do you interpret this as for the actual earnings? What do you think this means? Or it's not the earnings, but what do you think this means for growth this year?
This means for 2024, they clearly state volume growth may be notably lower than the growth rate achieved in 2023. I think at this pace right now, we might actually have a flat year or a year of decline. If you look at Q1, if you look at how Q2 is starting already right now, in China, not looking great. So unless somehow in Q3 or Q4 of this year, they announce already a new car, this year is a down year. Next year, huge growth because 1, this year is a down year, and 2, the launch of a new car happens way sooner than expected, helps with the volume growth.
Okay, let me go to the IR again. Someone is saying, what is Nate saying? They showed pics how the app will work. It's in the
Yeah.
look at the Robotaxi preview on the IR. Oh, the deck. Let me pull up the deck. So they're
page
showing
17.
17. Okay.
Yeah.
Congrats to the Bulls. It looks like they might have pulled it off. So
Wait. Elon has yet to speak.
Elon is yet to speak. That is true. We still have 40 minutes until he speaks. So we'll have the call here. This is the preview of the ride hailing in the Tesla app. So you can summon a car. It'll come pick you up in 3 minutes. It'll tell you the interior climate. It'll tell you when, this is like Uber without like a creepy dude that you're waiting for. And then it'll take you somewhere.
It's interesting because they have quite a tight relationship with Uber.
That is true. They they do have a quite big relationship. Is Uber down right now? Hold on, because Uber's been reacting like inversely to Tesla. Yeah, Uber's down 2%. Wow, Uber is down 2% just off the idea that maybe Tesla launches an official robotaxi. Neil, do you think this is enough to pump the stock? I mean, like, yes, this is good news, but we're not going to get real numbers anytime soon. But do you think the oversold nature of the stock means that at least this is enough to bounce?
Again, depends on what we get in the earnings call, because it's great to write what they wrote, but how are you going to achieve it? Is it from Shanghai? Is it purely only from the US? Because from Berlin, I don't think I'm not expecting much. So yeah, how are they going to do it? Plus, I mean, if we talk about the autonomy thing, I think he'll say the sentence, "This is an earnings call, not a product announcement call," as always. We'll have to wait for August 8/8, which, are we getting some Chinese news there? Because 8/8 is significant in China, etc., etc. Maybe, I don't know. I predicted maybe he's going to say FSDs will be available in China, but let's see.
Right. We got Dan Ives' tweet. Let's see what Dan Ives has to say. Dan Ives is bullish. Dan Ives' Model 2 looks like on the horizon based on PR. More on the call. This could be a major focus. So far, he's like, all right, I'm not gonna tank you guys. Let's go to CNBC real quick, see how they're reacting to this, and then we'll keep talking about what's going on. We'll cover Enphase in just a second, guys, as well.
Here with you, free cash flow, negative free cash flow. And I can't remember the last time Tesla had a quarter of negative free cash flow, negative 2.5 billion in free cash flow. Gross auto margins, excluding zero emission vehicle credits. At one time, this was up around 26, 27%, down to 11.6% in the first quarter. Gives you some perspective, guys. Also, operating profit margin of 5.5%. Gives you some perspective of the pressure that Tesla felt in the first quarter.
Okay, quickly, Phil, if it's cheaper models that utilize aspects of the current platform, is that lipstick on more price cuts?
No, I think what it is we are going to be coming out with some lower priced models. Not necessarily. So you're suggesting, John, are they going to take the Model 3 and strip it down even further and have Model 3 Lite? No, I think what they're saying is they will take what they have from the Model 3 and the Model Y. Those will be incorporated into some lower priced models. That's just my take in terms of reading the release at this point. The key being, if they're going into production in the second half of 25 with more modestly priced models, that's exactly what the street wants to hear. The street is not focused on robotaxi. That may be Elon Musk's dream in terms of taking this company there someday. That's not what the street wants to hear over the next couple of years. What they want to hear is what they saw from Tesla in this release, and obviously will be at the point of a lot of questions this afternoon during the analyst call. What do they mean in terms of more modestly priced models that will go into production in the second half of next year?
Yeah, I realize we need more.
All right, so we'll get back to that and see, but pretty much the same analysis you and I had, Neil. We're going to switch gears for like 5 minutes to talk about Enphase, because that seems to be down pretty badly right now. So let's look at Enphase. For those that don't know, Enphase is down 12% right now. It is a microinverter company, where essentially solar, that's what they make, the microinverters that go into the solar panels. The reason they're down is not only because it looks like they didn't do the best in their numbers, but rates are high. It's very hard to finance solar panels on your house if interest rates are high. So let's look at the numbers. They're down 12%, $100 right now. Revenue of $263 million, along with a 46.2% gross margin. So 263, I think, is in line with expectations, or a little bit lower. They lost 16 million bucks. Wow. They actually lost 16 million. This is a company that's been profitable for like 10 quarters in a row. Oh my. That's why they're down. That's why they're down, folks. They lost 16. Enphase has not lost money, if I'm not wrong, in a quarter for a couple of years now. These guys are a profitable company. This is that is something that I think the street is having to reconcile. How do they lose money for the first time? It's only 16 million, but still, it's the first time in a while. Free cash flow 41 million. I don't think they bought back any stock. Let's see buybacks. Did they do anything? No, it doesn't look like they bought back stock.
They didn't buy stock.
Did they?
So
oh no, they did. They did. Sorry. They repurchased 332,000 shares at an average price of 126. Stocks
it
at
would have
100.
been the dumbest move if they did not, because previously they bought when the stock was even higher.
Yeah,
if I remember,
like 180, 190 or something. International growth doesn't look like it's going crazy. During the first quarter of 2024, we shipped approximately 506,000 microinverters. Yeah, all these business highlights are nothing special. I mean, at the end of the day, their revenue streams are hit until interest rates come down. Any thoughts on Enphase, Neil? Do you own this company? Do you care about solar?
I don't own. I follow the company. I think for outlook, it's a bit better than this quarter, which finally they expect revenue to go up, which is great, because now if you look at revenue for Q1 2024, 263 million. Last year, same quarter, 726 million. Quite a hit. Gross margin came down 43.9. Of course, high interest rates doesn't help them at all. But yeah, I mean, if they see a small reacceleration next quarter, that's already a good start-ish. But gross margin next quarter are flat to down-ish. So that's not great. Still free cash flow positive, so at least there's that. But yeah, as long as interest rates stay high, companies like Enphase, SolarEdge, even Tesla Solar are going to take a hit.
SolarEdge is already down so much this year. It's down another 4%. SolarEdge is like a casualty of Enphase getting hit. So Enphase now at $100. I do think Enphase at 70, if we retest those October lows, gets very interesting. Nvidia's up a little bit. And then Tesla is still holding 6%. It's still holding. This is quite incredible. I am flabbergasted. I am surprised. I did not expect this. I thought it was tanking. I'm not going to lie. It doesn't look like it's tanking yet.
Yeah, regulatory credits are up slightly quarter over quarter, not by much.
Let's see if there's something else in this earnings deck that we missed. So we cover, guys. So if you're just joining, Tesla missed on everything, but they announced that the robo-taxis are coming. So that's why this thing is up. Let me read again the paragraph that I think the high-frequency trading algorithms are using AI to decide that Tesla should go up, and they're trading on that. We have updated our future vehicle lineup to accelerate the launch of new models ahead of our previously communicated start of production in the second half of 2025, which means either H2 2024 or H1 2025 at the latest. They're going to start probably building the M2, maybe. These new vehicles, including more affordable models, which that seems like the M2, will utilize aspects of next generation platform as well as aspects of our current platforms and will be able to be produced on the same manufacturing lines. This update may result in achieving less cost reduction than previously expected, but enables us to prudently grow. Now, here's the thing, Neil. If a smart analyst asks about these two paragraphs and he says, Elon Musk, don't bullshit me. When you say these new vehicles, including more affordable models, are you talking about a $25,000 Tesla that can go up against a Honda Civic or Toyota Corolla, or are you talking about a robo-taxi? Tell me the answer. Which one are you talking about that's going to start production in the next 12 months? Elon has to say the Civic competitor, right?
Yeah.
Because
I mean,
he
will probably say,
he doesn't, this thing tanks.
Nice. He'll probably use the words carefully, like it's going to be models, not one model. So there is that. Plus, I mean, if they do talk about the robo-taxi in another sentence, so maybe that's already the differentiation that we can make. But yeah, I still don't think he's going to 100% say, yes, this is the $25,000 car, which might never be 25,000, by the way, inflation adjusted. So,
yeah, it's probably not.
So yeah. But I
Very
mean,
interesting.
overall, I mean, besides the biggest part of the business, which is the automotive one, energy is up quarter over quarter, services up quarter over quarter. So, I mean, yeah, the parts of the business that can do well in this type of environment are doing well. So, yeah.
I mean, yeah, I think that's the question, guys. I think the whole earnings call does not matter. That question, whenever it comes, is going to matter. Because if Elon's kind of like, he's using his words super carefully, and then the street has to try to use their imagination to figure out, is this guy serious about this $25,000 M2, or is it like this robotaxi, or are they the same thing? Like, if he's not explicit, I think we could see some volatility to the downside. And this might be a little bit of a bull trap. But if he's like, no, this Reuters article is stupid. We're on the same timelines. FSD is getting better. We're going to be okay. Maybe the street buys it up. Maybe the street does indeed buy it up. Dan Ives, did he tweet again? Did he say anything? No, he said the same thing. Model 2 looks like it's on the horizon. Neil, we're going to go back to CNBC in a second, but let me ask you a question about the... Actually, no, we'll do CNBC real quick, and then I'll ask you this question. So we'll go back to CNBC, get their thoughts, and then we'll keep going from there.
Details on that, but quickly, Phil, does that mean we can put to bed this Reuters report that everybody's been talking about, despite the fact that Elon Musk basically batted it down, although not a lot of detail on X a couple weeks ago?
The one that said that they were going to scrap doing a Model 2 altogether. Yeah, I think, and there were a couple of reports after that, Morgan, where people came out who had talked with executives within the company who said, look, they're still working on this. Robotaxi is going to be getting more attention, but we're not done coming out with lower priced models.
All right, great clarification. Phil, thanks. Let's talk more Tesla with Tasha Keeney of ARK Invest and Steve Wesley of the Wesley Group.
This is ARK from Kathy's fund. This is Tasha. She's one of their major Tesla analysts. Here's what she has to say about this.
Also a former Tesla board member. Welcome, both of you. Steve, I'm trying to figure out how you get out of if you're Tesla, you get out of a price competition, cheaper Chinese EVs situation by, through price cuts and a cheaper car that has aspects of the current platform. What's the optimistic scenario here, Steve, that you see?
Look, you've got to get a $25,000 car out to market. And let's be honest, this was a terrible quarter. Year-over-year decline in Q1 sales haven't happened in 4 years. Poor Cybertruck numbers, increasing competition from BYD, Hyundai, Kia, 40% decline in share price. It doesn't get much tougher than that. On top of this, Elon's putting huge amount of pressure on the big August 8th robotaxi event. And my gut is anything less than an earth-shattering news on full self-driving and no 25K car could trigger a sell-off. Right now, Tesla needs to focus, and they need to get dates for bringing that new $25,000 car to market. If they do that, there's a lot of silver lining out there for them.
Tasha, your price target on Tesla is more than 10x up from here. So what is it that convinces investors in this situation that Tesla is worth that?
Yeah, well, let's talk about earth-shattering. I can't think of anything more earth-shattering than a car that drives itself. And I think that's exactly what people should be focused on. So yes, our previously published price target was $2,000 per share by 2027. We're updating that now, so look out for that research. But we think that 2/3 of the enterprise value in that year could be attributable to a robotaxi network. To ignore this is crazy in my mind. I think that this Tesla will be one of the greatest AI companies of our generation because of this. What's important now is we're hearing, that they're investing in compute. They're mentioning in the letter that, compute research is up 130% for the quarter. They'll continue to invest in compute. We want them to do that because the way that they have tuned the full self-driving neural net architecture is such that, they have this amazing data set, millions of cars on the road, over 2 million miles of driving data per day to train from. And, for a while they were compute constrained, and that's not the case anymore. So basically, new problems arise and they just need the compute to solve it. And now they're have that, or at least have line of sight to having that. I think that's huge. So I'm super excited for the robotaxi event later this year.
Okay. Steve, I mean, to even get, let's put the regulatory approvals that are going to be necessary aside for a moment. To even get to true autonomous driving and the realization of this on a mass scale in a way that's potentially financially meaningful for a Tesla, how much hinges on the fact that you need a lower priced car, you need scale, more vehicles on the road to fully deploy full self-driving and to fully realize software and services?
No, you and what Phil just said is exactly right. Robo-taxis will be the biggest deal in the world, but that's 5, 10, 12 years out. That's just aspirational talk. Tesla's got to figure out what they're doing for the next 3 years. And the short answer to that is the $25,000 car. I drive a Tesla, full self-driving. It's extraordinary. And Tesla and Waymo are the leaders. Let's give them credit. But they're at maybe 98, 99%. Before you have full self-driving robo-taxis, you have to be at 99.9999. That is years out. Tesla's got to fill that gap. There is some silver lining here. Look, they still control 51% of the EV market in the United States, more than all other companies combined. That's great. They're dominant in Europe. They have work to do in China. That's why they're bringing prices down. They control the charging network largely in North America and Europe. All other automakers are gravitating. They're going to use Tesla's network. And I don't think Tesla will be bashful about raising prices there. And their energy division is growing at record rates. $6 billion last year, should be at $10 billion by the next
perspective. I mean, we know that because Tesla is lowering the prices on its vehicles, it's just going to be even tougher for other automakers to compete. And I mean, they say it in their letter, other traditional automakers are actually pulling back on their electric vehicle plans, which is a humongous mistake and in fact might just cement their extinction from my perspective. We've done a lot of work, my colleague Sam Corris, on Wright's Law, and we think that battery costs are declining in line with Wright's Law, which means that for every cumulative doubling in production, you get a reduction in price. So, we see Tesla, they mentioned in the letter that COGS for the cost of goods sold for the Model Y are at all-time lows. We expect those to continue to come down. And now that they've cut prices, I mean, I'd be shaking in my boots if I was a traditional automaker. And, just quickly on robotaxi, I think that AI has continued to surprise us. And in fact, we published in our Big Ideas report this year that if you look at the forecasts of when we think we'll get artificial general intelligence, they've been decreasing pretty significantly over the past year or so. And that's because AI improvements are actually hard to predict. The night before ChatGPT came out, I don't think any of us knew what it was going to look like. These things happen overnight. I think Waymo has proved that it's possible because there's already robotaxis today on roads in the US ferrying paying passengers. And I think Tesla's going to be the first to do it at scale. So I wouldn't sleep on that opportunity.
Okay. Tasha Keeney and Steve Wesley, thanks for joining.
Neil, what do you think? You think this makes sense? You think this pump holds? I'm kind of skeptical about it. What are you thinking? You're muted.
I mean, every time I hear the $2,000 price target, I'm like already, leave me alone. But no, I mean, I just checked something else on the deck, and I mean, supercharger stations are up 26% year over year.
Wow.
And I mean, it's growing quite fast. If I mean, they've opened up their supercharger network to close to everyone. And everybody that's not a Tesla is paying a premium using a supercharger, right? I think Jerry rig everything, doesn't really rig everything, but okay. He said it's a 30% premium. So that's quite a money maker for them for the future, which I don't think a lot of people are paying attention to that.
So talk to me again about the supercharger. Why is the growth of that good for the business outside of just selling cars? Like, what type of revenue stream what type of margins does it look like on that business?
I mean, it's basically as if ExxonMobil or Chevron they are the gas station. So if they were selling cars, Tesla is selling cars, plus they have the gas station as well.
Right.
Right. But of course, they need more EV adoption to make more money from that. And like they said, more people like plug-in hybrids more, which is very, very strange because it's neither ICE nor is it EV. It's basically in the middle. So I guess people like to stay with gas in their cars. So, okay, maybe it might be cheaper. I don't know, maybe not in the United States, but in Europe, you can find quite a lot of of car brands and models that are cheaper, much cheaper than the average in the United States.
Right. We have a guest who just joined with us here today. Thank you, Mr. Vitaly, for being with us. What's up?
How's it going?
Hello, hello.
It's a decent little pump after hours, V. What are your raw thoughts to what's going on?
I mean, this is just trading, so let's hear some real news and we'll decide. But I agreed with you that earnings would not be good, but everybody knew that. That's why it's pumping. I mean, that's just like so obvious market psychology. But I don't get excited over $10 on Tesla. Like I don't know who's in it for the $10 pump, except obviously the day traders and the 0-day options people.
Gary Black.
Gary Black is excited. He's probably pissed because he's lost $10 more, right? He sold at 140.
Yeah, if you sold at 140, dude, I don't know about that. That's selling at 140. Well,
he's totally out now. He probably waited for this pump to get fully out. Have you seen Enphase? That's taking a shit.
Oh, you're good. Well, I'll ask you about that in a second. So, V, here's what I'm looking at. And I just tweeted this. I think that what's getting the street excited is this one paragraph, right? The numbers are disgusting. I mean, like the revenue, operating margins, EPS, it's really deliveries, obviously all bad. But this idea that more affordable models will be produced earlier, about 6 months earlier than what we thought in the second half of 2025, is that enough to get the street to buy the stock?
Well, that could be the answer to maybe the Model 2 is not going away. So there you go. This could be that line that we all needed to save Tesla stock from just cratering to $100, you know?
I think you're right. I don't know if it pumps to like 170 or 180 or whatever, but it definitely might not crater given the M2.
This is important. So we'll see what Elon says, but this is definitely important. Like I said, look, I'm a Tesla bull. Me and Carlos were talking even before he's going to come on soon. We were talking before the episode, and we know it's just a waiting game. Like, I don't know. We're getting sick and tired of talking about Tesla because it's like the same story. We just have to wait. We have to wait for our king Elon to do what he's going to do because you don't bet against Elon. I mean, that's just something serious. And yesterday when Chris made fun of me for saying that I would leave if Elon leaves, that's just the way most investors are thinking. I don't know if you're thinking that way as well. But Elon is the saving grace of why we invest in Tesla, because there is no car company that is worth $500 billion, or there shouldn't be. If that's what this is, if this is a car company, I'm just not interested. Robotaxis and robots and full self-driving and energy. This is what is exciting about Tesla, not just making cars. In 2018, that was enough at 40 billion market cap. At 500 billion market cap, it is not enough to just make cars. Just not. And Elon knows this. Okay. The problem is, are we willing to wait the 2 to 5 years or the 10 years, whatever it is? I'm assuming it's around 5. Are we willing to wait for that to happen? Because I think it is happening. It's just that a lot of people don't have a lot of patience. There are not a lot of investors out there. I don't care what you call yourselves. You're not investors. You're not willing to wait the 5 years. I understand that.
Yep. It's as if, I mean, early Apple investors, jobs left, would you have stayed? Probably not.
And the stock didn't do so well when he was the
gone. Company was going down the drain. Plus, let's hypothetically compare the iPhone release. If Apple never releases the iPhone, Tesla never works on autonomy, Apple would never be, or I don't know, $2 trillion.
Freeze out for you.
3. So yeah.
Is he frozen? What happened?
I think he said he's going to freeze.
No, I'm better. Did I predict my freeze before I froze?
You said I'm gonna.
I'm gonna fucking kill Elon.
You bring up an interesting thing, and Apple and Tesla are very similar. In fact, consumer products, right? Expensive consumer products, especially at the time when people are charging. What was the first iPhone? How much was it again? 400, 500? I forgot what it was.
Yeah, but they dropped the price quite quickly.
Well, as Tesla's doing as well with actual cars. But the example here is good because when Steve Jobs left, the stock stagnated. The guy who came in, what was his name? Was Scully? No. Who was that?
I don't know.
Scully?
I don't
yeah,
know
Scully. John Scully, Pepsi, a Pepsi fan.
Yeah.
He comes in. He doesn't know what the fuck he's doing with computers. He sells soda. I don't know why Jobs thought he was like the guy to do this. You needed Jobs to come back. Like, how many computer companies at that time were like, you know what? We should pivot into phones and internet devices. Like, nobody was thinking that. All right. Even I know those BlackBerry, but they didn't even have the right idea about the touchscreen and the modern operating system. So you need somebody like that to bring the whole ship around. And now look what's going on. When Steve Jobs died, you can have a CEO that's just a business guy run such a successful ship. I don't think we're still quite at that position yet, with Tesla being roughly a car company, because then the price would just go to $50, like everybody's saying. If it's just a car company, it's not worth this much. And me and Carlos were talking about this even before the pod. If you want to chime in.
What's up, everybody?
Carlos, we got a big,
Hello.
thick green candle on Tesla stock. You have a lot of your money, your net worth in this company, and it's doing well today. Everyone thought it would do bad. Why do you think they performed well this earnings?
Share the screen. Did you see?
Well, the earnings aren't over, buddy.
No, it's okay.
You still got a lot. I'm too excited.
The cart before the horse for this guy.
So this is did you guys already go over the
We went through everything. Yeah, I want to get your raw thoughts. We went through all the numbers.
So I just think the ride sharing. I think we knew that the numbers were going to be bad and people wanted some guidance on the future. And I'm thinking, at least for now, they're liking what they're hearing. They put all the right words in there. I think we got to look and see how many times the word AI is in the. They're saying all of the right things. They're doing all the right things that you want to see on an earnings call. Now he just needs to close the deal. He needs to.
This is the paragraph you're looking for, Carlos. This one paragraph I think is saving the stock.
Moved ahead. Yes, accelerated. Yes, that's the one I was looking for.
In terms of the numbers, Carlos, I mean, I think you would agree the numbers are just not that good.
Yeah, the numbers aren't that good. But I think with companies of this size, it's never a straight line up and down. And I think the street can forgive it if they understand, hey, this is not necessarily their fault, if it's an industry-wide thing, and if they get good guidance. I think more than like excuses or justifications for the current numbers, they want to know what you're doing to correct things and to move forward. If they get good guidance, then they have the confidence. It gives them like political cover from their investors.
Okay. Real quick, let's do a little bit of coverage on Enphase while we have you here. You both are bullish on Enphase. So what shocked me, the reason why Enphase is down, it's recovered. It was down like
by the way, I bought the dip at 101.
Oh, today? Oh, perfect. Awesome.
As soon as I saw it, I was like, oh, fuck, I got to get some of this.
Well, it's recovering. It was down 12%. Now it's down 6%. They became unprofitable for the first time in like 2 years.
That's true.
Is that why you think this is down right now?
That's a good reason.
Like, oh, man, you're getting a little smarter about this.
Look at this. You're really learning the stock market so well.
You've been studying.
You've been studying day and night.
I mean, this is what happens. You know, the one thing I didn't understand like a year ago, that interest rates would affect their business so much where they would actually turn unprofitable. And now here we are. Whether this lasts, that's a question, because I do think interest rates are coming down. And I think all the people waiting for solar will have to come around eventually. So that means the demand is just building up for those people to come in. It's not going away, because if they're not doing it, they're just not doing it now, right? Same thing here. I didn't tell you guys, but I had a solar project and I'm delaying it because there's no point to actually put money in now when I can be buying the dip on Enphase. So it's the same situation. But so yes, it is totally tanking and it's probably worth less. I actually looked at the chart recently that $85-$90 totally possible. And to me, it's a dip worth buying. And that's why I bought more today.
I mean, Outlook seems like they are seeing a reacceleration in revenue. So maybe demand is already picking up a little bit. Plus, still free cash flow positive. So I guess that's a positive.
Some of it, I think, is also due to the overproduction. They had too many inverters in the pipeline. So
yeah,
you have to start. And they've said this for quarters, and they said it was their bad.
Well, they said they were going to correct it. Apparently, are you saying they haven't yet? Still an issue?
Well, he said it takes a few quarters to flush that inventory, the stuff overseas. So they just made too many inverters. So now they don't have that.
Well, they did that a year ago. So now they're still dealing with it basically.
From the end of last quarter, into now. So end of last.
So we have survived so far the initial results and the reaction to the results. However, we do have this call coming up, and this call is going to determine a lot about if this stock can hold up. So here, I just want to show a screenshot from the last call, Q4 2023, of what happened. So Karan Booty-Raj says, just to comment on the barrier, I think this barrier, and we've actually talked about it, is like getting it to actually do something useful. He's talking about Optimus. Like we want to get it to walk around, we can get to do things, but it's not, it's the utility part. Elon says we can already do some useful things. Karan Bootyhard says, but like to making millions of these things, it's like utility. We've got to get the utility of it. If I was the CEO, I would take this guy to a back alley after this call was done, and I would legitimately smack the shit out of him. I would risk my entire life and my CEO job title and smacking the shit out of this guy for saying that our Optimus, which is the potential future, trillions of dollars depend on this product, you're already selling to investors that can't do anything useful.
Well, describe what that meeting would sound like. So you'd pull him in the office and you'd be like, "Hey, booty, booty.
Hey, booty, booty.
Hey,
Come
booty,
here.
booty.
Hey, booty hard.
Hey, you booty hard."
I'm just making fun of his name, guys. I'm Indian, but I don't even know how to say these fucking Indian names. I don't know how to say this shit. Do you think something like this can happen during this call, which would really make the call go bad?
No, I don't think a lot of the C-suite's been cut down. I don't think any.
Yeah, is he still an employee?
Well, who is this guy? He's like he's the VP of supply chain. That's who this guy is.
Ooh.
This is why you can't allow these people near.
Yeah, but wasn't Neil wasn't that
Drew?
Tim Cook?
I mean, technically, yeah, that was Tim
Saying,
Cook.
wasn't that Tim Cook's job? And that's
My point is, two senior execs left, Zach left, and now you're left with a bunch of what Dan Ives calls children on these earnings calls. Do you think the call will go that badly like it went last time?
No, I think Elon's going to run the call. He'll run the call, and he'll throw to people and say, "Hey, maybe so and so can fill in on specifics." But I think Elon's going to run the call. I think people understand, like, it's his company. They know what's at stake. Let him sink or swim. You don't want to be. I wouldn't. Would you say anything on the call? Would you say anything where the stock is and the future of the company? Would you open your mouth on that call?
Yeah, I think it's a call Elon has to take control of it completely.
Vitaly, you think this call can go a little to the downside if people start talking?
I mean, Elon just has to say a couple of good things, basically about this Model 2 not being canceled and that we're going to start producing vehicles earlier. But if he says we're going straight for robotaxis with that earlier vehicle, I think that's the issue. So I still think that's a big deal, even if he's right in the end.
Yeah, I think last time the earnings right now, guys, the stock is up 8%, 156. Last time the stock was down about 5% going into the call, and then Elon made it worse. Now the stock's up. So the initial reaction, it's been almost an hour. The street's like, all right, we'll buy the stupid stock. Now, if they mess up on the earnings call, you don't want to give them a reason to sell. If they can just avoid giving a reason to sell, maybe this thing continues to pump a little bit more.
But it's actually so crazy that the stock is up 8% while the numbers suck. The only thing that changed the street's sentiment is two sentences in an investor relations deck. It's nuts because nothing changed besides those promises. Financially, the company, horrible quarter. This year, probably going to be a down year, maybe flat if I'm optimistic, unless the launch of the affordable model happens in, I don't know, Q4 by some wonder, miracle. But yeah, it's crazy how Wall Street acts.
The thing is, the reason they act that way, there is a reason, because once again, the people who are covering Tesla are car people. They can model what cars are going to sell for. So if Tesla makes a Model 2, 25 grand, we can model, okay, they sell 5 million of these things. That goes into the revenue, right? What are they going to do with robotaxi? What's the number for that?
Right.
Yeah, but there are still so many unknowns. Like Elon said 25,000. He also said that the Cybertruck, I don't know how many years was it already, was going to be XYZ. It's more expensive. I don't know. It's lots of unknowns, but yeah, I agree. It's easier to model for just selling cars at XYZ margins.
Gary Black can model a car, right?
Now
Isn't that the thing?
Exactly. The catalysts are now in line.
These are the same companies that cover Uber and Lyft, and they understand that business model very clearly and would understand how Tesla would benefit with an autonomous service as a competitor. They understand.
I just put a StreamYard in the chat. For anyone who wants to join, you can join and ask a question. One thing I would say is if you could turn the camera on, just because if we can't see you and then you end up saying some crazy stuff, which I'd rather avoid it. So just please make sure you have your camera on, even if it's your phone camera, just so we know you're real. Or in the private chat, you can say, hey, I'm a real person, and you can ask a question. Okay, so here's another question. Do you think the compensation package will be brought up in the call? And what do you think Elon's going to say to try to convince? He's talking to the people who are going to vote at the end of the day for this package to get him this deal.
that's another reason why I don't think you're going to get gloom and doom Elon, because he knows that that's in play. But I don't know. I'd like to think that it's not as up in the air as people think, that it's pretty much a slam dunk. It's going to get voted yes. I can't see it getting voted no.
Right.
I guess there's a possibility, but I don't see it as a realistic possibility. I don't know.
Tesla.
What do you think? You really think that there's what do you give the chance of him getting a no?
Right.
1 to 100.
Right.
Give it a percent.
I think it's like 1%. It's a no. I mean, I think he's getting this job because he's going to leave, and if he leaves, the tech company's
Well,
done.
I mean, last time it was what, around 25%, right? When it passed the first time.
Yeah.
So
it was 80 something percent.
I just don't understand who are the 25% of people who are like, you know what, I don't want this guy there. He 10x my stock.
Have you checked your feed today? They're out there.
I just don't know. Are they even investors though? Do they even have any actual shares? Because like I have real money in this company, so I would never say no to Elon in terms of like being the CEO. He's the whole impetus for Tesla 10xing. Like this.
Yeah,
is
dude.
ridiculous.
If you have real money in Tesla, like hundreds of thousands of millions of dollars, there's no way you could. Tesla's up 9% right now. There's no way you could say that you don't want Elon as CEO. We have someone joining backstage, good friend of the channel.
Who's that guy though? Hey, what's up? Who's that guy though? Who the big investor who said I am voting no?
Ross.
Yeah.
No. The Chinese investor.
Kai something, I don't know.
Yeah.
Leo.
He's like the largest retail investor.
How could he? I mean, I don't understand why he wants to tank his own.
But he trades apparently.
But he has 24 million shares.
Like last time we checked, I don't know.
Here's a question to everybody: what is Tesla worth if Elon is not there?
Yeah, put it in the chat. What do you think? Okay. What do you think? What do you think?
It's 100 billion.
Neil, what do you think? What are they worth?
It's 100 billion.
Well,
I think it's
if he leaves, I'm selling my stuff. So I would say 20% of what it's worth today.
1/5, right?
So 100 billion. 100 billion.
30 billion. Yeah, absolutely.
$30 share.
There is no reason to stick around Tesla if Elon's gone. Absolutely no reason.
Nope.
TJ, give me your raw thoughts on these earnings. You have quite a significant Tesla position as well. You've got real money in the company. What are you thinking about these earnings?
I think that they're pretty much what we expected, guys. I mean, that's the beautiful thing about Tesla as a shareholder is there's not really a lot of surprises with the numbers because they report deliveries on a regular basis. So if they miss on deliveries, they're obviously going to miss on earnings. I think it's going to come down to the conference call, guys. I don't think that the bulls need to be singing Kumbaya around the campfire right now because the man that's about to speak could easily tank this shit 20%, saying a couple of the wrong things or having really bad energy like he had a couple of conference calls before. But I'm cautiously optimistic. I think that they'll definitely get the momentum on their side again, but this is not going to be an overnight turnaround story. This is, in my opinion, on the low end, it's probably 18 months. On the high end, it's probably 5 years. They're going to have to announce gigafactories in Mexico and India. Robo-taxi is going to have to be a legitimate thing. The robots going to have to come correct. The energy play is going to have to get bigger. I mean, they have so many verticals, but they're all in their infancy in comparison to actually building and selling cars. So it's like, how do you factor all of that in? And that's why Tesla is such an enigma, and it's so exciting as an investor because people are going to argue, and whenever they argue, it creates volatility. And for people like me that sell options for a living, Tesla is the fucking wild wet dream. So it's just absolutely beautiful. But in a nutshell, the earnings were not that good if you just look at the numbers. But I don't think that that's what the stock market is. It's a forward-looking instrument. So we always have to look at where is this company going to be 12 to 18 months from now? Because that's what Wall Street is going to start pricing in right now today. So you have to be a little bit of a visionary. And I think that that's where people get stuck. Is they're like, this is where the company's at right now, and this is what it's going to be worth right now. And I'm like, that's not how investing works. Like, they're going to start pricing this shit in 12 to 18 months down the road, pricing it in today. So you have to be willing to make that bet today. And that's why investing is so damn hard, in my opinion. Anyway, those are my raw thoughts. I'm excited for the conference call, just like all of you guys. I have a lot of puts open on this company. I have 2,500 shares in the big account. I'm down big, $196 average on the shares, but I still cover calls against them. So it's not the end of the world, man. I'm just going to sell puts, sell calls, collect premium, And I'm a long-term investor with a long-term mindset. So I don't mind being down as long as the investment thesis is intact. So I'm always just looking to hear the words that come out of his mouth, just to make sure that the investment thesis, we're going in the right direction, because obviously we know it's going to take time.
Yeah, it's also a big pivot. It's also a big pivot from what people thought we were going to hear. So he's got to hold people's hands and walk us through the thesis as to why this is a great idea and get people excited. I was telling Vitaly before we got on the call, if over the next couple of days you start hearing the mainstream media narrative start to be about robo-taxis, taking things seriously, you start seeing more people diving into Uber's business model, I think that's a win. In the same way that we saw about the bot, right? At first it was laughed at, then you started seeing more coverage and it was taken seriously. Then a player like NVIDIA came out. Now it's a legitimate space. Those are things too that I think Wall Street needs to see, that there's other players, legitimate opponents, right? Competitors in this space. They go, all right, these big boys are throwing money at it, so that they can see it as more than just a car company.
What do you guys think about the idea that the market does start pricing the company in 12 to 18 months ahead of schedule? Like, I feel like Vitaly and Carlos totally understand that. I'm not familiar with the couch investor. Shout out to him, because you're the guy with the Lakers jersey, right? I'm diehard Kobe. So
anyway. Dude, that game winner last night was tough. That was rough.
You guys know the only reason I started watching the Miz channel is because this dude does a fucking video with the Lakers cap on.
I did. I had a Lakers cap.
What a fucking random thing.
And now I'm controlling $100,000 of your capital.
That's how it started. This dude does a video with the Lakers cap on, and I'm like, hold on, what does this guy have to say? And he looked like I didn't want him on the plane. You know what I mean? He had the freaking crazy beard on and all this shit, and then he started sounding.
And you saw the hat, and you're like, all right.
He started sounding super smart. And I was like, let me just take a step back. This guy's like really, really articulate. And he started talking Palantir, and it was awesome. And now we text all the time, and he pussed out. I showed him a screenshot today on Shopify. We could have been up a lot more money, but instead he wants to be buying over degenerate calls on Tesla at $180 strike, lighting $30 on fire, bro.
No, I'm gonna be up. I'm gonna be up like 40% tomorrow if this fucking thing holds.
You can get somebody on the other side to dance with you.
Someone better buy this shit. Someone better buy it.
It's going right to Cheesecake Factory on Friday.
It's going right to Cheesecake Factory. Real quick, TJ, do you want to stay with us their whole call? Do you want to just be on with us?
Yeah, my wife's out running errands. I probably got a few minutes. I want to talk Enphase, my man, because I saw on the chats that people were like praying for me and stuff because Enphase went down to like $100 or something like that. And then I just got a notification. Enphase is like 105 or something again, or 108. I mean, guys, y'all got to understand that this stuff's very volatile. So you have to have a 3 to 5 year mindset. If not, you're going to drive yourself crazy.
Yeah. And for you, TJ, you're collecting about 50 grand in covered call premium if it stays below 125 by this Friday, correct?
Yeah. I can show it in a little bit. But yeah, man, Enphase, I've generated since I got assigned on your birthday weekend in Vegas, got assigned 11,000 shares at 139 average. Brought in $117,000 in covered call premium since.
Wow.
So what did that cost you? You did that with cash secured puts, right?
Yeah. So it got assigned at 1.537 million, 11,000 shares at 139.74, I think, or 139.64. And I've been very aggressive with these covered calls. I've been selling covered calls and using my strategy and my knowledge of the wheel strategy to be able to roll. So I've been selling these covered calls even below my cost basis at times. I highly don't recommend doing that unless you really know what you're doing, because you can blow up an account very quickly. But I've had to roll out and up a couple of times, dude, because Enphase, dude, it went all crazy, going like 130 or something a month or two ago, and I was like, what the hell is going on? So I had to defend my covered calls. Mm-hmm. But yeah, I did $117,000 later. I've lowered the adjusted cost basis to 118. So
that's what I was going to ask you. So yeah, the goal is that the goal would be to have it be zero cost basis.
Yeah, it's going to take a while on Enphase. It's an expensive stock.
What, 10 years?
Yeah, but I've also brought in 120,000 on the cash secured put side of things.
Right.
So I mean, it's already generated.
You don't count that as like lowering the cost basis?
For sure I do. But at the end of the day, I'll never sell the shares for less than I paid for them.
All right, let's get back to some more Tesla stuff. Neil, I want your thoughts on Optimus. Do you think they're going to say anything interesting about Optimus, or is it going to be just not talking.
I don't think it's the quarter or the call to talk about Optimus. If they want to talk about it, do another Tesla AI day or something like that. Now it's purely focused on the car business. Maybe energy if they want to.
Carlos, your thoughts on Optimus? Or if they talk
I
about
agree.
it?
They'll usually do like either an AI day or an investor day or something in September, I'm imagining, and that would be the time to do that. But if he's smart and he announces a female Optimus that they're building, forget it. Then
and a pre-order.
yeah,
And a pre-order.
yeah, with
Ex Machina.
right. Then you'll win your call option on Friday.
Okay, let me bring this up. And Vitaly, I want you to answer that question about Optimus, but also take a look at this. Tesla doubled its AI compute over the last 3 months. They spent $1 billion on AI infrastructure, which is why they were down $2.5 billion on capex, because they spent $1 billion on these H100s. Do you think this chart right here is the single biggest reason why every bear should be afraid of being a bear? Because no other company is going to be able to replicate what they're doing here. That's the Vitaly.
No other car company.
Well, yeah. So he answered it. Look, if Wall Street thinks they're a car company, then this is a waste of money. They don't see value in it today, and even if they did, once again, I don't think they know how to value it. So this doesn't help us. This helps us long term as Tesla investors and Tesla bulls, but it doesn't help Wall Street in terms of getting some price targets up and a turnaround happening.
I would take the other side of that, because almost any company in the last year and a half, 2 years that's had charts that look like that about talking about AI and compute and their increase in data has gotten an incredible multiple as a result of it, because they're understanding that the data is the lead. And that
their revenue increased, and then they looked at those charts.
No, but hold on.
Meta.
But you have to seed it. You have to seed. You have to understand that there is a capex expenditure, and he'll probably talk about that on the call. What it costs, why they spend so much capex, and how they expect to not spend that over the next couple of quarters, and their lead in data. That's why I think if he says that those things, the buzzword, this could be the quarter where Wall Street takes it seriously as a legitimate AI play. We still have not seen that happen, and that I think is still would unlock some multiple there.
I'll give you where this actually becomes important. Let's say next quarter, Elon says 50% of FSD uptake. If he says anything close to that, or even, I guess, 30, above 30, because right now, what is it, 10, 15 currently?
Yeah.
I think it's around 10.
Not that much, 10%.
Yeah. So as long as it's some high number, 30, 40, 50% uptake on full self-driving, and he's selling them a SaaS business, I think all of a sudden the narrative changes. And that would be great timing.
He's probably going to get asked that question right now already after free trial over. Do you see some effects already right now? Hopefully he has a good answer.
It's harder to tell now, right? So
yeah, but early sneak peeks. But yeah.
TJ, any thoughts you have on Optimus? Do you care about that as your thesis, or what is your reason for owning a lot of Tesla?
It's the bull case and the bear case. It's fucking Elon Musk, bro. This is a bet on Elon Musk. Nothing else, nothing more. It is what it is. I did this post 3 or 4 years ago on my Facebook page. If there's only one stock that I could own, it would be Tesla, and my hashtag was betting on Elon. I just think he's an alien. I think that he was Optimus before Optimus. This guy's just a fucking weirdo, that nothing like we've ever seen in our lifetime. And I don't want to have my money betting against him, because everything that he set out to do in life, he's been able to accomplish as far as from a business perspective. But that also is the biggest issue with Tesla is the key man risk. Because y'all were talking about what's Tesla worth, dude. Tesla is fucking a $50 stock without Elon Musk. And I'll tell you what it also doesn't have is $1 of my fucking money. Like, I'm out of there with the quickness, bro. I'm talking about, like, I don't know which one I'm going to do it on, the computer, the mouse, the phone. I don't know. That shit is out of there quick. When are they voting on his package on the compensation?
June.
And actually, I did have a question about that, because I've been looking for it. What effect does the stock price, the current stock price, if and when it's approved, have over the shares? Because Chris brought this up as a point about Elon's incentives to control the price up or down, and I'm curious if that has any effect on the option.
Yeah, as in if Tesla tanks to 100, do his options get priced at 100?
Like, are they?
Neil,
Is it a dollar amount, or is it like a guaranteed number of shares? If it's a guaranteed number of shares, then the price doesn't matter. Or is it like $56 billion because that's what it would have been worth at the time?
Right.
Do you understand? If it's a dollar amount, then you're like, okay, yeah, he wants the stock to go down because that'll increase.
Yeah, because 56 billion divided by $100 a share is way more than 56 billion divided by 250.
So how does that exactly work? If he still has to redo the vested period, so he still has to wait the 5 years. So he's already waited the 5 years. Now he has to wait another 5 years. So I'm curious how the rules change differently, and I can't seem to find the data.
Well, I assume that when the options are voted on, it has to be somewhere around that date. So whatever the price of Tesla is around that time, has to be around that date.
But do you not see
it can't be like today's price. You know, that wouldn't make any sense.
Conflict of interest in that? If you knew that, your incentive is to get the stock.
So are you claiming Elon is all tanking us on purpose?
I mean, he was going to take us private.
The framing of it is inherently like just the setup is inherently, I don't know, flawed. If that's the case.
But how do y'all feel about the current valuation? Because I feel like it's totally justified. I mean, they're not delivering on the growth right now. Like, I feel like this isn't, people aren't after Elon right now. This isn't an Elon thing and he's tweeting and all this other shit that's offensive. I just think that Tesla's not delivering on a bunch of key metrics and they deserve to be in the fucking toilet right now. Let's just call it what it is. This isn't a Tesla circle jerk. Let's just call it what it is. Tesla's not delivering.
Don't tell me what kind of jerk this is, okay?
They should be trading at these levels. They should probably be trading at 125 if they don't right this ship here in the next quarter or two. They probably deserve to be trading at 125, maybe 100. And then at that point, let's go up and to the right. But the metrics have to support that kind of price action as well.
I mean, I was saying that too. It should be, look, the stock should be $100. That's absolutely 100% true. Elon gets a little bit of cachet from the market, even though we all talk about how everybody hates him. No, the company, even as it tanks, is worth $500 billion or $450 billion. Okay. He gets a lot of leeway. So absolutely, I agree with you, TJ. It should be around $100, and I think we might see that. You know,
I actually would argue that this 144 or whatever is what the market actually thinks is fair value. Because understand, 44% is retail owned, 45% is institutions. So institutions only have 50% of the say, and I think this is the average of the sentiment, and it's 144. This is honestly what I think. This is what the market thinks is fair value right now, because. How the hell else? How much lower? What else do they have to say to get it?
Well, you've just defined the market. At any point, that's what it thinks is the value.
But like, unless he fucks the call up, like what else? What else? We saw the data. We know it's not great. You know, we know that. What else could happen that's going to tank the stock to 125? Right?
I mean, even if he fucks the call up, the value stays the same unless he like discredits everything that's written in the earnings report. If you get it cheaper, but the value stays the same, then you found yourself a bargain. But yeah, not everybody thinks the same, of course.
Do you guys think that Tesla will? Because I'm this weirdo that thinks that Tesla will be the most valuable company in the history of man, and by 20,
you're not a weirdo. There's a lot of people that believe.
No, but I'm saying by 2030, like I have a hard timeline. By 2030, I don't give a shit if your name's Apple, Google, Microsoft. I don't give a shit. Tesla's going to be a bigger company. I believe that wholeheartedly, and my portfolio is starting to look like I believe it as well. I've been putting my money where my mouth is. But how do you guys think about that? Now, what does that translate to? 1,500, 200, 2,000? I don't do that whole Kathy Wood shit. I don't know. What I'm saying is I'm talking about market cap, because there's a lot of stuff that could happen with share prices and stock splits and all this. But I'm talking about market cap. I do think that there would be in the $3 to $4 trillion range by 2030 once these other verticals really take off for them. Am I the only crazy one in that camp, or Vitaly's nodding his head? Are you in that camp as well?
Yeah, I mean, my base case was around 2 trillion. That it should be at some point worth that. 2030 sounds like a good round number to agree with you. 3 trillion, 4 trillion would be just absolutely amazing.
You know how Tesla really gets to 5 trillion?
Now we're at 5.
If they
just say 10. How do I get to 10? I'm trying to be a reasonable bear at 2 trillion, but let's go to 10. Why not?
You're not bullish enough, dude. You're not bullish. This Elon fucking
right. How many
bull? I'm sorry.
How many boot camps does Elon need?
I was about to say, if Tesla integrates the operating system for the enterprise that is Palantir into their operations. I can see it propelling the valuation to an astronomical extent that would make us all very wealthy. So
I have a question to you
Yes.
guys. If Trump gets elected,
Ooh.
he will probably say drill, baby, drill, even though the US is now producing more, I think, barrels than ever before. But do you think he will have a negative impact on everything that's EV and sustainability and stuff like that?
Well, that's a great question. I'm from the oil field industry, and I can wholeheartedly tell you that Trump is all about turn that shit to the right. That's the drill bit, drill baby drill. And he doesn't like shoving EVs down people's throats. So I think that he would just create just basic capitalism and give you an opportunity to choose. That's it. Because as much as Biden has maybe tried to shove EVs down your throat, how many of y'all own EVs on the channel? I know Vitaly and Carlos do. I don't own one yet. Amit doesn't own one yet. Do you own an EV yet, Neil?
No, I do not. I
Well,
barely use a car.
But his point is, Trump has said he would roll back a lot of the EV initiatives. He might cancel or undermine things from the IRA, the EV tax credit, things like that would go away. That's a big deal.
I don't think Trump affects Tesla though. At the end of the day, this train EVs are happening.
He likes Musk. He always talks about, I like the man with the rockets. The rockets go up in the air, and he understands that Elon's in
huge.
Starlink, but he's also got a base that is not necessarily a fan.
Real quick, let me just say this, Carlos, because everyone's asking. Earnings is in 18 minutes, guys. So don't worry. 18 minutes, then we'll start earnings. Go ahead, keep going.
Just wanted to circle back to a point that you said earlier, and then I don't mean to derail, but this idea about Tesla being the most valuable company in the world. I would say that in the 2040s, I think we're going to start to see the rise of like mega companies. Like, I don't see us having this infinite number of option of companies to invest in the future. I just can't see, like, if Google keeps getting bigger and keeps printing money, there's only so much that you can pump your EPS. That money eventually becomes to just massive amounts of power and expansion. And I think our rules about monopolies, right, and competition, I think that it's going to have to evolve to companies that are of this magnitude. A lot of these rules, like antitrust, were in place with companies when we didn't even have a $1 trillion company. Now it's ridiculous. Some of these companies have market caps that are GDPs of countries. So you kind of have to start treating them differently. And to that sense, yeah, I think it sounds crazy for us to talk about a $10 trillion company, but I think we're going to see multiple 3, 4, 5, $1 trillion companies in the future, and maybe less overall stocks to invest in as they absorb all of that. I don't know. What do you guys think of that? You're muted, Amit.
Sorry, I was muted. Yeah, I think you're right. I think companies are going to get bigger. This NVIDIA sort of data center play is going to get larger and larger and larger.
Right. AI it touches everything. So you can go to any business.
AI is going to touch everything. Companies are going to spend more. I mean, inflation in general is going to make market caps go higher. I think you're right. So then the question is 5 trillion that crazy if AI expands the pie as big as it is?
What's NVIDIA at if Tesla's at 10 trillion? Right.
Yeah, I mean, NVIDIA right now is at 2 trillion. Tesla's at 500 billion, right? So
yeah, but some might say that NVIDIA has peaked or will be peaking soon if every other hyperscaler is going to make their own chips. They rely less on NVIDIA.
Well, so when everyone says NVIDIA peaks, my thought is
market share wise.
Correct, but my thought.
Wait, but homeboy pivoted to software. He's already on that. He already knows that they're going to stop buying chips, and he's offering that whole, what was that, the Omniverse thing?
Mm-hmm. Yes, but also if ChatGPT Sora, the text to video, is using NVIDIA GPUs right now, and let's say they don't want to use the competitors, even though the competitors are out there, and they get 500 million users in the next 5 years, they're going to need a lot more H100. So I think the overall demand will increase even if it becomes competitive. And then it's a question of, is NVIDIA's H100 better than whatever Google comes up with? And if ChatGPT has been using NVIDIA for like 10 years at that point, why would they switch?
But not everybody needs a H100s.
That's
As
true.
The tech becomes better and better. I mean, Zuckerberg talked about that not so long ago.
Right.
And then he went and bought like 100,000 of them. I just want to point out, we're going to need the H100s and things like it for a long time. NVIDIA is absolutely not going anywhere for years. Years and years and years.
We're not bearish NVIDIA, by the way.
We're not bearish NVIDIA. At least I'm not.
Trying to have the conversation. Yeah.
The point is, if you do believe that Tesla's going to get to these ridiculous market caps, you have to ask yourself, what if these other companies are not just sitting around doing that? And what gets them there? Okay, so let's say it's the bot. Well, then who's number 2 in that space? And if let's say it's robotaxi, who's number 2 in that space? Those are other opportunities, right? So,
Why, dude, this AI, look, AI's everywhere. AI's everywhere.
What was that? I forgot how did we do that? Yeah, they're right. It was the 2000.
Okay, let me ask you guys this question, because this is something. Okay, I don't want to start a huge debate here. Okay, so we're not going to start a huge debate, but I just want to get people's perspectives. Let's get Neil's perspective first. My friend Peggy on Twitter says, "Rip Uber." Robotaxi is going to replace Uber. And the graphic is kind of sick, dude. This thing is basically, there's no creepy guy that you're waiting for. It's just a Tesla you're waiting for.
You can set the temperature in the car before you get there. You can set the music. You can bring your account over so it knows like your preferences, right? You see that?
What do you mean? Hold on. There's a creepy guy who has to sit in the chair for the first 2 years until it's full self-driving. So there is a creepy guy there.
Wait, so how's that going to work? There's going to be a random dude that's supervising the car.
Optimus.
He's in the trunk. He's in the trunk.
Well, it'll be like what you see. Mars did that the other when 12.3.3 came out. He said immediate first build, went on a couple of Uber rides. He gets the Uber ride and then uses the Tesla to actually perform the ride. Tesla's argument is that if you're an Uber driver doing that, you can make more money using your car for the same thing as long as FSD is doing the drive. Because we're going to return more of the money back to you because our input costs are lower. So that would be the way that this network starts. They're very
So my question is, Uber's down 2%. My question is, does Uber realistically have something to worry about for the next 2 years? Should we be stressed out about Uber?
Come on, man.
Here's the question. Here's the question. Here's the question. You're in the Uber, you're in the Uber conference room and you're there with all your C-suite and you're like, okay, Tesla's coming out with this. What's your response? What's going to be our response? Because if you're going to say, oh no, nothing could ever unseat Uber, you have to explain how. What is Uber's response to that? Or Lyft?
Let's get Neil's thoughts, then Vitaly. Neil, go ahead.
It's a very, very good question, actually, because Uber doesn't own the car. The car, if you're a Tesla driver, is owned by Tesla, and they now have an app. Plus, in the future, I believe Tesla will license their FSD. That means that Tesla now has not only Tesla cars using the Tesla Robotaxi app, but they are taking even more cars that usually maybe are on the Uber app. So, I think it's going to take a while until this thing goes worldwide, because Uber is worldwide, not just in the United States. I don't think we're going to have robotaxis in Europe or other countries anytime soon. But the CEO of Uber is probably going to have some discussions as soon as possible.
Okay, wait. And so before you respond, Vitaly, this is why I ask this, because that there were conversations in the headquarters at Blockbuster when Netflix came out, right? And they were like, what is your response? And there were ways that we know now that they could have adjusted and gotten ahead of it. And they didn't. And so
they could have actually bought it. They chose not to. They didn't want to pay $1 billion or something like that. Something stupid.
So you're at Uber right now. You see that this thing's coming out, and you say, okay, let's have this conversation about autonomy, our business model, and how do we compete, or what's our answer to Tesla that ensures we're number one?
I think you're assuming that Tesla's going to run their own network, and there's going to be no other autonomous networks, including one that Tesla supplies with their software or in their hardware. And I think they're obviously going to want to make a partners with the biggest logistics company in the world, Uber. They're going to want to partner in some form so this sustainable transition happens faster, not takes longer. So I think Uber will be part of this discussion, and I'm pretty sure Uber is already having this discussion. Because Uber sold their autonomy unit. I don't know if you guys remember that, but they got rid of their autonomy unit. Yeah, probably for a reason, because they saw what was happening. Mobileye, Tesla. They're like, okay, we're going to partner with the winners here.
All right. Well, so then, if I'm hearing you right, you think that Tesla will choose to partner with Uber as opposed to directly compete with them?
Even if they choose to compete, they're still going to want to have partners. Meaning, it doesn't have to be like, oh, well, you guys take over the whole network. It doesn't have to be that. I think Tesla's not going to be the only provider of autonomous services. There's going to be other companies. And Tesla can get a VIG. It can get its 30%. And Uber doesn't care where it gives it 30%. Do we give it to the driver or do we give it to Tesla? We don't give a shit. Give it to any one of them.
How would the partnership work?
Well, I'm not going to go into, I'm not at Tesla's board, but Elon has said, let me just point this out. Elon has said that companies can come talk to us about our full self-driving stack.
He's
and
talking
we are
about,
willing to deal with them.
right, but he's talking about car companies. I'm saying, what is in it for Tesla?
Because
What does Uber have that Tesla needs? Is my question.
A big network already. You
What
still
does
have to develop that.
What does Uber bring to that?
It's like you're saying, what does Facebook have that some third party can't just come and do right away in 2 days?
You know, on Uber right now,
It's look, even if Tesla can do it alone, it would take them a very long time while they're still building out these vehicles and doing everything else. So I think they're going to want to partner with somebody who can scale this up very fast and they can start making a big profit very quickly.
I don't know. I just don't see it.
Well, either way, is it going to happen in a year or two? I think pretty much Uber is very safe for multiple years while this all happens.
Uber provides distribution, but I have to understand, at least initially, this is where we need these questions answered. For a dedicated robotaxi, those vehicles are only going to be on Tesla's network. But if we go back to autonomy day, then they're going to start with Model 3s and Model Ys. And there's Uber drivers out there that are already using those vehicles. And I feel what they're doing, I feel like them extending olive branches to Uber are just to entice their workers to come over. That's what it seems like to me.
Because the distribution that Uber has, the distribution is the car, and the car is Tesla. So I mean, I understand Uber has Uber Eats and fine, but
well, that's a big
all the
thing.
other cars don't
What
have
you just mentioned
FSD.
is not a small thing, by the way.
No, I know, but all the other cars that are in the Uber network do not have FSD, so they will have zero impact for Tesla unless they switch. But then if they switch, it's already parts of the Tesla pie, let's say. So I don't know, it's quite interesting. I mean, if Tesla chooses to give something to Uber or work with them, it's just for the time being, because eventually they wouldn't need Uber in the long term.
Well, once again, are we talking 10, 15 years from now? We're talking about 3 years from now. What are we talking about here? See, 3 years, Uber's
Whenever
not going
this thing
anywhere.
launches, right? That's
because
it's going to take a long time if Tesla wants to go at it alone in order to do everything, as opposed to partnering, like Elon has said. He's even said, "I'll partner." Ford wants to come to me. That probably means if Uber wants to come to me, what does he care?
That's different. See, that's different. Working with the car manufacturers is different than working with the competitor and the ride sharing. That's different. I really think that Tesla is looking at Uber as like, we need to just obsolete them. We're going to automate them out of business, because they're basically acting as a broker between a human driver that wants to drive someone and someone looking for a ride. Tesla's saying automate the whole fucking thing and get the cars automatic.
Once again, are you talking about 3 years from now or 15 years from now? 15 years from now, you could be absolutely 100% right.
I'm saying if we just look at the compute, look at the data, I'm thinking within 2 to 3 years, that's like complete transformation of our
I think the only difference between me and Carlos is we just have different timelines. But otherwise, I agree with what's going to happen.
Vitaly,
Uber would be a dead company.
Longer for
I just add 7 years to whatever Carlos says. And I add another 15 to Elon's.
Yeah.
Guys, real quick, for those that are asking about the call, trust me, we do not want to hear ourselves talk more than Elon. So sometimes these comments are so why would we not be playing the call? The call has not started.
Right.
First of all, you guys can go on the call yourself. You click a button, you go watch the call. All right, not to kick people off on Amit's channel, but
no, you don't have to leave. It's just that some of these questions, these are like, what type of
don't
call?
leave.
Obviously, we're waiting for the call. Why would we be talking while Elon's talking? No, in 5 minutes it'll start. It'll start in 5 minutes.
I will say this for Uber is the, like I said, it's the Uber Eats part. For Tesla to not have to change the whole thing, it's just basically, this is what Uber gives us. So all the partnership, all the deals that they have with all the restaurant chains and etc. That's a big plus.
In New York, when Uber first launched, it was a nightmare for those drivers to pick people up at official places. There was so much pushback and so much. Now the airports have designated ride-hailing places. When Uber Eats first happened, the Uber drivers were walking in. They didn't know where to go to pick up food, delivery, whatnot. Now they have dedicated lines. My belief would be that if autonomy really takes off and the companies see the benefit of this, they will create areas, pick up and drop off only at concert venues or even shopping, like restaurants or supermarkets. The autonomous vehicle pulls up, you open it up, it's all visible in cameras, they load it up and the car comes back to you. I can see that happening. And once that happens, now you've really got a sort of mobile autonomous economy where goods and services are moving autonomously. And that's where you can see.
I mean, if Elon pulls that off, dude, That'd be incredible.
Dude, he's think
Gonna
about
pull
it.
it off. This is the thing. I agree. This is going to happen. It's just the timeline when this happens.
So
Things that I think are 5-10 years out are autonomous convoys of semis driving them all themselves across the country. Like
That's probably next year. I'd say.
TJ, go ahead. What were you gonna say?
So let me get this right, because I feel like I'm a little discombobulated mentally because I've got so much fucking money riding on these earnings. Do you guys not see any value in the Uber infrastructure at all, or do you just give me a thumb up or thumb down?
No, there's a lot of value in Uber.
I'm
Carlos
just saying,
is
is this
ultra
company-
bearish.
I think you know where I stand, right? I got to do this.
Clarify, I just mean value to Tesla.
There you
as
This,
a
this
partnership
company
with
delivered 9 billion rides in 70 countries in 2023. How could Tesla not benefit from that infrastructure? I drove Uber. I completed 5,000 rides as a fucking Uber driver, whatever you want to call it. I just feel like it just makes more sense for them to do some sort of a partnership / merger / takeover and use all of that infrastructure that Uber already has in place. Because why does Tesla want to start a whole new branch when they could just take over one that's already pretty robust in Uber and probably buy it for pennies on the dollar, because they could just play a hand of poker, and Elon will be like, here's two options. One, we can put you out of business, or we can merge and we can blow this thing up in a really, really big way. I just feel like there's value. Like Uber's not going anywhere. I think Elon will play it right. The fastest way would be for them to do some sort of consolidation of technologies, because Uber specializes in getting people from point A to point B.
Well, here's the thing, TJ. The only way I think you're wrong and Carlos is right is if FSD is actually that good and the robotaxi is actually that good and people are getting picked up by this random thing that comes over, gets in the car, it's all customized, and you don't need to wait for a driver, say hi, hello, and it actually happens at scale, then yeah, robotaxi should take away market share. And if Uber can't compete from a driverless perspective, then Uber's fucked, right? But I don't think that's going to happen. I think they're eventually going to create some autonomy, license FSD, something. I don't know if the best case scenario plays out.
But I'm talking about like the user interface of the app and all that. Like Tesla doesn't have that. They put out 4 pretty fucking little pictures of an iPhone, guys.
No,
well, an app isn't hard to build.
It's like SoFi and Hood's app. SoFi sucks. Hood's is badass.
Wait. TJ, they've been building the app for years, and if you think about what
we don't know if it's good.
No, wait. They've been building the app for years, and if you think about the
not gonna be as bad as SoFi.
Wait.
I'll tell you that.
SoFi sucks. I'm a big bull in SoFi.
I'm gonna be as bad as SoFi, dude.
Go ahead.
No, the only other point is if you
Why
think
aren't you putting on the call? Why do I got to listen to
3
this
minutes?
shit?
That's 3 minutes, guys. It has 3 minutes.
If you think about what they have to do, say map infrastructure wise, just to lay out the supercharging network,
Right?
It's already there. They've already got very, very granular detail of the entire United States. So the map data, all that data is already there. They've already got the route planners and all of that, because they have to do that to route people to superchargers. All they're doing is expanding what they're doing for superchargers, going point to point. And so,
yeah, the app is not hard, dude. The app is
that's the easiest.
The hard part is making the car drive itself. Like,
hard to kill people.
They figure that shit out, then. But granted, I don't think it's gonna happen.
But what I think what y'all are discounting is that people do not take to change very quickly. And if you have a Uber app, it's going to be hard to get you conditioned to go to the Tesla app. So why would you want to just
everybody uses all the apps and they just find the cheapest one?
Yeah, dude. If it's cheaper, I'm using robotaxi. I don't care. If I like FSD, I'll use it. Neil, go ahead real quick. You're gonna say something.
Unmute yourself.
You're muted, man.
You're muted.
Oh, okay. Yeah. If Uber only had Teslas, then I would have agreed. But Uber does not only have Teslas. So the people that will be using the Tesla robotaxi probably already have the Tesla app on their phones. And if not, big deal. You download 3 taps, 30 seconds later, you have the app on your phone. And that's about it. Probably you're going to get some incentives as well to use the app. 3 rides, 5 rides in the first month or something.
There'll be promotions all over X. Click here to download the app.
And I agree with all of that in this country, but what about the other 69 countries that Uber is in, and Tesla is only in a handful of those? Wouldn't Uber help Tesla in that situation?
Well, look, it doesn't happen overnight, but to Neil's point, the Tesla drivers that are already on the Uber app, right? And then there's a bunch of drivers that are on the app that are driving ICE vehicles that have no benefit to Tesla whatsoever. So the only benefit to Tesla are the small percentage of the Uber drivers that are also Tesla. That's why I say, and Tesla doesn't have enough vehicles to provide all of the rides for everyone that Uber does per year. So I don't see it as like they're going to replace them overnight, but I see it as them slowly gutting them year over year over year to the point where they might eventually go out of business or severely restrict. But those are the types of catalysts that I think actually start getting Tesla stock up, is when you start seeing them actually disrupting the other companies. Because in order to get there, they've got to take market cap from other companies. You don't just invent $10 trillion to come into Tesla.
Right.
It's got to come from companies that they displace. And I feel like those are the things that we might see over the next couple of years.
All right, we should get this call. We have some music going.
Yes, Byron.
Call should be starting in like 30 seconds, guys.
I don't own one share of Uber, by the way, guys. That's
Elon's like, he's like, I just wanted to stir something up.
Don't get me started with the fees. I couldn't believe it. Like McDonald's is like $30 to deliver to your house. Like McDonald's.
All right, here we go. We're starting.
My name is Martin Vieca, VP of Investor Relations, and I'm joined today by Elon Musk, Vaibhav Taneja, and a number of other executives. Our Q1 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events and results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thanks, Martin. So to recap, in Q1, we navigated several unforeseen challenges, as well as the ramp of the updated Model 3 in Fremont. There was, as people have seen, the EV adoption rate globally is under pressure, and a lot of other auto manufacturers are pulling back on EVs and pursuing plug-in hybrids instead. We believe this is not the right strategy, and electric vehicles will ultimately dominate the market. Despite these challenges, the Tesla team did a great job executing in a tough environment, and energy storage deployments, the Megapack in particular, reached an all-time high in Q1, leading to record profitability for the energy business. And that looks likely to continue to increase in the quarters and years ahead. It will increase. We actually know that it will. Significantly faster than the car business, as we expected. We also continue to expand our AI training capacity in Q1, more than doubling our training compute sequentially. In terms of the new product roadmap, there's been a lot of talk about our upcoming vehicle line in the past several weeks. We've updated our future vehicle lineup to accelerate the launch of new models ahead of previously mentioned start of production in the second half of 2025. So we expect it to be more like the early 2025, if not late this year. These new vehicles, including more affordable models, will use aspects of the next generation platform, as well as aspects of our current platforms, and will be able to be produced on the same manufacturing lines as our current vehicle lineup. So it's not contingent on any new factory or massive new production line. It'll be made on our current production lines much more efficiently. And we think this should allow us to get to over 3 million vehicles of capacity when realized to the full extent. Regarding FSD version 12, which is the pure AI-based self-driving, people that if you haven't experienced this, I strongly urge you to try it out. It's profound, and the rate of improvement is rapid. So we've now turned that on for all cars with the cameras and inference computer and everything from hardware 3 on in North America. So it's been pushed out to, I think, around 1.8 million vehicles, and we're seeing about half of people use it so far, and that percentage is increasing with each passing week. So we now have over 300 billion miles that have been driven with FSD V12. Since the launch of full self-driving, supervised full self-driving, it's become very clear that the vision-based approach with end-to-end neural networks is the right solution for scalable autonomy. And it's really how humans drive. Our entire road network is designed for biological neural nets and eyes. So naturally, cameras and digital neural nets are the solution to our current road system. To make it more accessible, we've reduced the subscription price to $99 a month, so it's easy to try out. And as we've announced, we'll be showcasing our purpose-built robotaxi or cybercab in August.
Cybercab.
Regarding AI compute, over the past few months, we've been actively working on expanding Tesla's core AI infrastructure. For a while there, we were training constrained in our progress. We are, at this point, no longer training constrained, and so we're making rapid progress. We've installed and commissioned, meaning they're actually working, 35,000 H100 computers or GPUs. GPU is the wrong word. They need a new word. I always feel like a wince when I say GPU because it's not GPU. G stands for graphics and doesn't do graphics. But anyway, roughly 35,000 H100s are active, and we expect that to be probably 85,000 or thereabouts by the end of this year. In training, just for training. We are making sure that we're being as efficient as possible in our training. It's not just about the number of H100s, but how efficiently they're used. So in conclusion, we're super excited about our autonomy roadmap. I think it should be obvious to anyone who's driving version 12 in a Tesla that is only a matter of time before we exceed the reliability of humans, and not much time at that. And we're really headed for an electric vehicle, an autonomous future. And I'll go back to something I said several years ago, that in the future, gasoline cars that are not autonomous will be like riding a horse and using a flip phone. And that will become very obvious in hindsight. We continue to make the necessary investments that will drive growth and profits for Tesla in the future. And I wanted to thank the Tesla team for incredible execution during this period and look forward to everything that we have planned ahead. Thanks.
Thank you very much. And Vaibhav has some comments as well.
Thanks. It's important to acknowledge what Elon said. From our auto business perspective, we did see a decline in revenues quarter over quarter, and those were primarily because of seasonality, uncertain macroeconomic environment, and the other reasons which Elon had mentioned earlier. Auto margins declined from 18.9 to 18.5%, excluding the impact of Cybertruck. The impact of pricing actions was largely offset by reductions in per unit cost and the recognition of revenue from auto park feature for certain vehicles in US that previously did not have that functionality. Additionally, while we did experience higher costs due to the ramp of Model 3 in Fremont and disruptions in Berlin, these costs were largely offset by cost reduction initiatives. In fact, if we exclude Cybertruck and Fremont Model 3 ramp costs, the revenue from auto park, auto margins improved slightly. Currently, normalized Model Y cost per vehicle in Austin and Berlin are already very close to that of Fremont. Our ability to reduce costs without sacrificing on quality was due to the amazing efforts of the team in executing Tesla's relentless pursuit of efficiency across the business. We've also witnessed that as other OEMs are pulling back on their investments in EV, there is increasing appetite for credits, and that means a steady stream of revenue for us. Obviously, seeing others pull back from EV is not the future we want. We would prefer it the whole industry went all in. On the demand front, we have undertaken a variety of initiatives, including lowering the price of both the purchase and subscription options for FSD, launching extremely attractive leasing specials for the Model 3 in the US for $299 a month, and offering attractive financing options in certain markets. We believe that our awareness activities paired with attractive financing will go a long way in expanding our reach and driving demand for our products. Our energy business continues to make meaningful progress with margins reaching a record of 24.6%. We expect the energy storage deployments for 2024 to grow at least 75% higher from 2023. And accordingly, this business will begin contributing significantly to our overall profitability. Note that there is a bit of lumpiness in our storage deployments due to a variety of factors that are outside of our control, so deployments may fluctuate quarter over quarter. On the operating expense front, we saw a sequential increase from our AI initiatives, continued investment in future projects, marketing, and other activities. We had negative free cash flow of $2.5 billion in the first quarter. The primary driver of this was an increase in inventory from a mismatch between builds and deliveries, as discussed before, and our elevated spend on CapEx across various initiatives, including AI compute. We expect the inventory build to reverse in the second quarter and free cash flow to return to positive again. As we prepare the company for the next phase of growth, we had to make the hard but necessary decision to reduce our headcount by over 10%. The savings generated are expected to be well in excess of $1 billion on an annual run rate basis. We are also getting hyper-focused on CapEx efficiency and utilizing our installed capacity in a more efficient manner. The savings from these initiatives, including our cost reductions, will help improve our overall profitability and ultimately enable us to increase the scale of our investments in AI. In conclusion, the future is extremely bright, and the journey to get there, while challenging, will be extremely rewarding. Once again, I would like to thank the whole Tesla team for delivering great results, and we can open it up to Q&A.
Thank you. Okay, let's start with investor Q&A. The first question is, what is the status of 4680? What is the current output? Lars?
Sure. 4680 production increased about 18-20% over from Q4, reaching greater than 1K a week for Cybertruck, which is about 7 gigawatt hours per year, as we posted on X. We expect to stay ahead of the Cybertruck ramp with the cell production throughout Q2 as we ramp the 3rd of 4 lines in phase 1, while maintaining multiple weeks of cell inventory to make sure we're ahead of the ramp. Because we're ramping, COGS continues to drop rapidly week over week, driven by yield improvements throughout the lines and production volume increases. So our goal, and we expect to do this, is to beat supplier costs of nickel-based cells by the end of the year.
Thank you. The second question is on Optimus. So what is the current status of Optimus? Are they currently performing any factory tasks? When do you expect to start mass production?
We are able to do simple factory tasks, or at least I should say factory tasks in the lab. In terms of actually, we do think we will have Optimus in limited production in the factory, in the actual factory itself, doing useful tasks before the end of this year. And then I think we may be able to sell it externally by the end of next year. These are just guesses. As I've said before, I think Optimus will be more valuable than everything else combined. Because if you've got a sentient humanoid robot that is able to navigate reality and do tasks at request, there is no meaningful limit to the size of the economy. So that's what's going to happen. And I think Tesla is best positioned of any humanoid robot maker to be able to reach volume production with efficient inference on the robot itself. This perhaps is a point that is worth emphasizing. Tesla's AI inference efficiency is vastly better than any other company. No, there's no company even close to the inference efficiency of Tesla. We've had to do that because we were constrained by the inference hardware in the car. We didn't have a choice. But that will pay dividends in many ways.
Thank you. The third question is, what is the
Did he say dividends?
assessment of the pathway towards regulatory approval for unsupervised FSD in the US? And how should we think about the appropriate safety threshold compared to human drivers?
Sure, I can start. There are a handful of states that already have adopted autonomous vehicle laws. These states are paving the way for operations, while the data for such operations guides a broader adoption of driverless vehicles. I think Ashok can talk a little bit about our safety methodology, but we expect that these states and the work ongoing, as well as the data that we're providing, will pave the way for a broad-based regulatory approval in the US at least, and then other countries as well.
Yeah. It's actually been pretty helpful that other autonomous car companies have been cutting a path through the regulatory jungle. That's actually quite helpful. And they have obviously been operating in San Francisco for a while. I think they got approval for City of LA. So these approvals are happening rapidly. I think if you've got at scale a statistically significant amount of data that shows conclusively that the autonomous car has, let's say, half the accident rate of a human-driven car, I think that's difficult to ignore, because at that point, stopping autonomy means killing people. So I actually do not think that there will be significant regulatory barriers, provided there is conclusive data that the autonomous car is safer than a human-driven car. And in my view, this will be much like elevators. Like, elevators used to be operated by a guy with a relay switch, but sometimes that guy would get tired or drunk or just make a mistake and shear somebody in half between floors. So now we just get in an elevator and press a button. We don't think about it. In fact, it's kind of weird if somebody's standing there with a relay switch. That'll be how cars work. You just summon a car using your phone. You get in, it takes you to a destination, you get out.
You don't even think about it.
You don't even think about it. Just like an elevator. It takes you to your floor. That's it. Don't think about how the elevator is working or anything like that. Now, something I should clarify is that Tesla will be operating the fleet. So you can think of like how Tesla, think of Tesla like, I don't know, some combination of Airbnb and Uber, meaning that there'll be some number of cars that Tesla owns itself and operates in the fleet. There'll be some number of cars, and then there'll be a bunch of cars where they're owned by the end user, but that end user can add or subtract their car to the fleet whenever they want. And they can decide if they want to only let the car be used by friends and family, or only by 5-star users, or by anyone. And at any time, they could have the car come back to them and be exclusively theirs, like an Airbnb. You could rent out your guest room or not anytime you want. As our fleet grows, we have 7 million cars, 9 million cars, eventually tens of millions of cars worldwide. With a constant feedback loop, every time something goes wrong, that gets added to the training data, and you get this training flywheel happening in the same way that Google search has the sort of flywheel. It's very difficult to compete with Google because people are constantly doing searches and clicking, and Google's getting that feedback loop. It's the same with Tesla, but at a scale that is maybe difficult to comprehend, but ultimately be tens of millions. I think there's also some potential here for an AWS element down the road, where if we've got very powerful inference, because we've got a hardware 3 in the cars, but now all cars are being made with hardware 4. Hardware 5 is pretty much designed and should be in cars hopefully towards the end of next year. And there's a potential to have to run when the car is not moving to actually run distributed inference. So kind of like AWS, but distributed inference. Like it takes a lot of computers to train an AI model, but many orders of magnitude less compute to run it. So if you can imagine a future perhaps where there's a fleet of 100 million Teslas, and on average they've got like maybe a kilowatt of inference compute, that's 100 gigawatts of inference compute distributed all around the world. It's pretty hard to put together 100 gigawatts of AI compute. And even in an autonomous future where the car is perhaps used, instead of being used 10 hours a week, is used 50 hours a week, that still leaves over 100 hours a week where the car inference computer could be doing something else. And it seems like it would be a waste not to use it.
Asher, do you want to chime in on your process and safety?
Yeah, we have like multiple tiers of validating the safety. For like in any given week, we train hundreds of neural networks that can produce different trajectories for how to drive the car. We replay them through the millions of clips that we have already collected from our users and our own QA. Those are like critical events, like someone jumping out in front, or like other critical events that we have gathered a database over many, many years. And we replay through all of them to make sure that we are net improving safety. And on top of it, we have simulation systems that also try to recreate this and test this in closed loop fashion. Once all of this is validated, we give it to our own QA drivers. We have hundreds of them in different cities, in San Francisco, Los Angeles, Austin, New York, a lot of different locations. They are also driving this and collecting real world miles. And we have an estimate of what are the critical events. Are they a net improvement compared to the previous week's builds? And once we have confidence that the build is a net improvement, then we start shipping to early users, like 2,000 employees initially, that they would like get the build. They would give feedback on like if it's an improvement, or are they noticing some new issues that we did not capture in our own QA process. And only after all of this is validated, then we go to external customers. And even when we go external, we have like live dashboards of monitoring every critical event that's happening in the fleet, sorted by the criticality of it. So we are having a constant pulse on the build's quality and the safety improvement along the way. And then any failures, like Elon alluded to, you get the data back, add it to the training, and that improves the model in the next cycle. So we have this like constant feedback loop of issues, fixes, evaluations, and then it rinse and repeat. And especially with the new V2 architecture, all of this is automatically improving without requiring much engineering interventions, in the sense that engineers don't have to be creative in like how they code the algorithms. It's mostly learning on its own based on data. So you see that, okay, we failed here, or like this is how a person shows, this is how you drive this intersection or something like that. We get the data back, we add it to the neural network, and it learns from that training data automatically, instead of some engineers saying that, oh, here you must rotate the steering wheel by this much or something like that. There's no hard if-else conditions. It's everything is neural network. It's very soft, it's probabilistic. So it will adapt its probability distribution based on the new data that it's getting.
Yeah, and we do have some insight into how good the things will be in, like, let's say 3 or 4 months, because we have advanced models that are far more capable than what is in the car, but have some issues with them that we need to fix. So there'll be a step change improvement in the capabilities of the car, but it'll have some quirks that are that need to be addressed in order to release it. As Ashok was saying, we have to be very careful in what we release to the fleet, or to customers in general. So like if we look at say 12.4 and 12.5, which are really could arguably even be version 13, version 14, because it's pretty close to a total retrain of the neural nets in each case, or substantially different. So we have good insight into where the models, how well the car will perform in say 3 or 4 months.
Yeah, in terms of scaling laws, people in the AI community generally talk about model scaling laws, where they increase the model size a lot, and then they have corresponding gains in performance. But we have also figured out scaling laws in other axes. In addition to the model size scaling, We can also have data scaling. You can increase the amount of data you use to train the neural network, and that also gives similar gains. And you can also scale up by training compute. You can train it for much longer and get want more GPUs or more Dojo nodes, and that also gives better performance. And you can also have architecture scaling, where you come up with better architectures that for the same amount of compute produce better results. So a combination of model size scaling, data scaling, training compute scaling, and the architecture scaling, we can basically extract, okay, if we continue scaling based on this ratio, we can sort of predict future performance. Obviously, it takes time to do the experiments because it takes few weeks to train. It takes few weeks to collect tens of millions of video clips and process all of them. But you can estimate what's going to be the future progress based on the trends that we have seen in the past, and they've generally held true based on the past data.
Okay, thank you very much. Let's go to the next question, which is, can we get an official announcement of the timeline for the $25,000 vehicle?
I think Elon mentioned it in the opening remarks, but as you mentioned, we're updating our future vehicle lineup to accelerate the launch of our low-cost vehicles in a more CapEx efficient way. That's our mission, to get the most affordable cars to customers as fast as possible. These new vehicles we built on our existing lines and open capacity, and that's a major shift, to utilize all our capacity with marginal CapEx before we go spend high CapEx to do anything.
Yeah, we'll talk about this more on August 8th. But really the way to think of Tesla is almost entirely in terms of solving autonomy and being able to turn on that autonomy for a gigantic fleet. And I think it might be the biggest asset value appreciation in history when that day happens, when you can do unsupervised full self-driving.
5 million cars.
Yeah.
Well, a little less.
Well,
Some of those have, yeah.
It'll be 7 million cars, in a year or so.
Yeah.
And then 10 million, and then, eventually we're talking about tens of millions of cars. Not eventually, it's like before the end of this decade. Yeah, before the end of the decade, it's several tens of millions of cars, I think.
Thank you. The next question is, what is the progress of Cybertruck ramp?
I can take that one too. Cybertruck hit 1K a week just a couple weeks ago. This happened in the first 4 to 5 months since we SOP'd late last year. Of course, volume production is what matters. That's what drives costs, and so our costs are dropping. But the ramp still faces a lot of challenges with so many new technologies, some supplier limitations, et cetera, and we'll continue to ramp this year, just focusing on cost efficiency and quality.
Okay, thank you. The next question, have any of the legacy automakers contacted Tesla about possibly licensing FSD in the future?
We're in conversations with one major automaker regarding licensing FSD.
Thank you. The next question is about the robotaxi unveil. Elon already talked about that, so we'll have to wait till August. The following question is about the next generation vehicle. We already talked about that. So let's go to the Semi. What is the timeline for scaling Semi? I think
sure. So we're finalizing the engineering of the Semi to enable a super cost-effective, high-volume production with our learnings from our fleet and our pilot fleet and Pepsi's fleet, which we're expanding this year marginally. In parallel, as we showed in the shareholders deck, we have started construction on the factory in Reno. Our first vehicles are planned for late 2025 with external customers starting in 2026.
Okay, a couple more questions. So our favorite, can we make FSD transfer permanent until FSD is fully delivered with level 5 autonomy?
No.
Okay, next question. What is gating the production ramp at Lathrop? Where do you see the megapack run rate at the end of the year? Mike?
Yeah, Lathrop is ramping as planned. We have our second GA line allowing us to increase our exit rate from 20 gigawatt hours per year to, at the start of this year, to 40 gigawatt hours per year by the end of the year. That line's commissioned. There's really nothing limiting the ramp. So it's given the longer sales cycles for these large projects, we typically have order visibility 12 to 24 months prior to ship dates. So we're able to plan the build plan several quarters in advance. So this allows us to ramp the factory to align with the business and order growth. Lastly, we'd like to thank our customers globally for their trust in Tesla as a partner for these incredible projects.
Okay, thank you very much. Let's go to analyst questions. The first question comes from Tony Sacconaghi from Bernstein. Tony, please go ahead and unmute.
Thank you for taking the question. I was just wondering if you could elaborate a little bit more on kind of the new vehicles that you talked about today. Are these like tweaks on existing models, given that they're going to be running on the same lines, or are these like new models? And how should we think about them, in the context of like the Model 3 Highland update? What will these models be like relative to that? And given the quick time frame, Model 3 Highland has required a lot of work and a lot of retooling. Maybe you can help put that all in context. Thank you. And I have a follow-up, please.
I think we've said all we will on that front. So what's your follow-up?
It's a more personal one for you, Elon, which is that you're leading many important companies right now. Maybe you can just talk about where your heart is at in terms of your interests, and do you expect to lessen your involvement with Tesla at any point over the next 3 years?
Well, Tesla constitutes the majority of my work time, and I work pretty much every day of the week. It's rare for me to take a Sunday afternoon off. So I'm going to make sure Tesla is very prosperous, and I think it is prosperous, and it will be very much so in the future.
Okay, thank you. Let's go to Adam Jonas from Morgan Stanley. Adam, please go ahead.
He
And
just
unmute.
resigned, guys.
Okay, great. Hey, Elon. So you and your team on volume expect a 2024 growth rate notably lower than that achieved in 2023. But what's your team's degree of confidence on growth above 0%? Or in other words, does that statement leave room for potentially lower sales year on year?
No, I think we'll have higher sales this year than last year.
Okay. My follow-up, Elon, on future product. If you had nailed execution, assuming that you nail execution on your next gen, cheaper vehicles, more aggressive giga castings, I don't want to say one piece, but getting closer to one piece, structural pack, unboxed, 300-mile range, $25,000 price point, putting aside robotaxi, those features unique to you, how long would it take your best Chinese competitors to copy a cheaper and better vehicle that you could offer a couple of years from now? How long would it take your best Chinese competitors to copy that? Thanks.
I mean, I don't know what our competitors could do, except we've done relatively better than they have. If you look at the drop in our competitors in China sales versus our drop in sales, our drop was less than theirs. So we're doing well. But I think Kathy Wood said it best. Like, really, we should be thought of as an AI or robotics company. If you value Tesla as just like an auto company, you just have to fundamentally. It's just the wrong framework, and it will come to. If you ask the wrong question, then the right answer is impossible. So. I mean, if somebody doesn't believe Tesla is going to solve autonomy, I think they should not be an investor in the company. Like that is, but we will, and we are. And then you have a car that goes from 10 hours of use a week, like an hour and a half a day, to probably 50, but it costs the same.
I think that's the key thing to remember, right? Especially if you look at FSD supervised. If you didn't believe in autonomy, they should give you a preview that this is coming. It's actually getting better day by day.
Yeah, if you've not tried the FSD 12.3, and And like I said, 12.4 is going to be significantly better, and 12.5 even better than that. And we have visibility into those things. Then you really don't understand what's going on. It's not possible.
Yeah, and that's why we can't just look at just as a car company, because a car company would just have a car. But here we have more than a car company because the cars can be autonomous. And like I said, it's happening.
Yeah, this is all in addition to Tesla. Working, the overall AI community is just like increasing, like improving rapidly.
Yeah. I mean, we're putting the actual auto in automobile. So, so sort of a lot of it, we like, well, sort of like, tell us about future horse carriages you're making. I'm like, well, actually, it doesn't need a horse. That's the whole point. And that's really the whole point.
Okay, thank you. The next question comes from Alex Potter from Piper Sandler. Alex, please go ahead and unmute.
Great, thanks. So couldn't agree more. The thesis hinges completely on AI, the future of AI, full self-driving, neural net training, all of these things. In that context, Elon, you've spoken about your desire to obtain 25% voting control of the company. And I understand completely why that would be. So I'm not necessarily asking about that. I'm asking if you've come up with any mechanism by which you can ensure that you'll obtain that level of voting control, because if not, then the core part of the thesis could potentially be at risk. So any additional commentary you might have on that topic?
Well, I think no matter what, Tesla, even if I got kidnapped by aliens tomorrow, Tesla will solve autonomy, maybe a little slower, but it would solve autonomy for vehicles at least. I don't know if it would win on with respect to Optimus or with respect to future products, but it would. But there's enough momentum for Tesla to solve autonomy, even if I disappeared for vehicles. Now there's a whole range of things we can do in the future beyond that. I'd be more reticent with respect to Optimus. If we have a super sentient humanoid robot that can follow you indoors and that you can't escape, we're talking Terminator level risk, then I'd be uncomfortable with, if there's not some meaningful level of influence over how that is deployed. If there's shareholders have an opportunity to ratify or re-ratify the sort of competition, I guess I can't say that. Whatever, but that is a fact. They have an opportunity.
Okay. Very good.
And we'll see if the company generates a lot of positive cash flow, we could obviously buy back shares.
All right, that's actually all very helpful context. Thank you. Maybe one final question, then I'll pass it on. OpEx reductions. Thank you for quantifying the impact there. I'd be interested also in potentially more qualitative discussion of what the implications are for these headcount reductions. What are the types of activities that you're presumably sacrificing as a result of parting ways with these folks? Thanks very much.
So, like we said, we've done these headcount reductions across the board. And, as companies grow over time, there are certain redundancies, there's some duplication of efforts which happens in certain areas. So you need to go back and look at where all these pockets are, get rid of it. So we're basically going through that exercise wherein we're like, hey, how do we set this company right for the next phase of growth? And the way to think about it is, any tree which grows, it needs pruning. This is the pruning exercise which we went through. And at the end of it, we'll be much stronger and much more resilient to deal with the future, because the future is really bright. Like I said in my opening remarks, we just have to get through this period and get there.
Yeah, we're not giving up anything that it's significant that I'm aware of. So we've had a long period of prosperity from 2019 to now, And so if a company sort of organizationally is 5% wrong per year, that accumulates to 25, 30% of inefficiency. We've made some corrections along the way, but it is time to reorganize the company for the next phase of growth. And you really need to reorganize it, just like a human. When we start off as one cell and become a zygote and blastocyst, and you start growing arms and legs, and briefly you have a tail. And so.
But you shed the tail.
You shed the tail, hopefully, and then you're a baby, and you basically you have to be different. The organism, a company is kind of like a creature growing, and if you don't reorganize it for different phases of growth, it will fail. You can't have the same organizational structure if you're 10 cells versus 100 versus 1 million versus 1 billion versus 1 trillion. Where humans are like around 35 trillion cells. Doesn't feel like it feels like feel like one person, but you're basically a walking cell colony of roughly 35 trillion, depending on your body mass, and about 3 times that number in bacteria. So anyway, you've got to reorganize the company for a new phase of growth, or it will fail to achieve that growth.
Thank you. Let's go to Mark Delaney from Goldman Sachs. Mark, please go ahead and unmute.
Yes, good afternoon. Thanks very much for taking the question. The company had previously characterized potential FSD licensing discussions as in the early phase, and some OEMs had not really been believing in it. Can you elaborate on how much the licensing business opportunity you mentioned today has progressed? And is there anything Tesla needs to achieve with the technology in terms of product milestones in order to be successful at reaching a licensing agreement, in your view?
Well, I think it just needs to be obvious that our approach is the right approach. And I think it is. I think we've now with 12.3, if you just have the car drive you around, it is obvious that our solution with a relatively low cost inference computer and standard cameras can achieve self-driving. No LiDARs, no radars, no ultrasonics, nothing. Just
no heavy integration work for vehicle manufacturers.
Yeah, it's so it would really just be a case of having them use the same cameras and inference computer and licensing our software. And but it's once it becomes obvious that if you don't have this in a car, nobody wants your car. Yeah, it's like it's a smart car. I still remember back when Nokia was king of the hill. Yeah,
the cell phone industry.
Yeah, crushing. And I saw them come out with a smartphone that was basically a brick with limited functionality. And then the iPhone and Android. But people still did not understand that all the phones are going to be that way. There's not going to be any flip phones. There'll be a niche product.
Or home phones.
Yeah, not even exactly. When was the last time you saw a home phone? Is it like an anachronism?
I have no idea.
Yeah.
In a hotel. Sometimes in a hotel.
Yeah, the hotels have them. Yeah. So the people don't understand, all cars will need to be smart cars, or you will not sell this. The car will not. Nobody will buy it. Once that becomes obvious, I think licensing becomes not optional.
Becomes a method of survival.
Yeah, so it's license it, or nobody will buy your car.
I mean, one other thing which I'll add is, in the conversations which we've had with some of these OEMs, I just want to also point out that they take a lot of time in their product life cycle.
Yeah.
They're talking about years before they will, put it in their product. We might have a licensing deal earlier than that, but it takes a while. So this is where the big difference between us and them is, right?
Yeah, I mean, really, a deal signed now would result in it being in a car in probably 3 years.
Mm-hmm. That would be early.
Yeah, that's like lightning, basically. So
that's being an eager OEM.
Yeah. So, I mean, I wouldn't be surprised if we do sign a deal. I think we're good chance we do sign a deal this year. Maybe more than one. But yeah, it would be probably 3 years before it's integrated with a car, even though all you need is cameras and our inference computer. So it's like not a massive design change.
Yeah, and again, just to clarify, it's not the work which we have to do, it's the work which they have to do, which will take the time.
Right, Mark, do
Very
you have a follow-up?
Yeah, very helpful. Thank you. My follow-up was to better understand Tesla's approach to pricing going forward. Previously, the company had said that the price reductions were driving incremental demand. With how affordable the cars have become, especially for vehicles that have access to IRA credits and some of the leasing offers that Tesla has in place, do you still see meaningful incremental price reductions as making sense from here for the existing products? And can the company meaningfully lower prices from here and also stay free cash flow positive on an annual basis with the current product set? Thanks.
Yeah, I think we can be free cash flow positive meaningfully. Yeah.
I think Vaibhav said it in his opening remarks, like our cost down efforts, we basically were offsetting the price cuts.
That's what I was going to say.
Goal. Like we're trying to give it back to the customers.
Yeah. I mean, at the end of the day, like for any given company, if you sell a great product at a great price, if you have a great product at a great price, the sales will be excellent. That's true of any arena. So over time, we do need to keep making sure that that it's a great product at a great price, and moreover, that price is accessible to people. So it's not, you have to solve both the value for money and the fundamental affordability question. The fundamental affordability question is sometimes overlooked. If somebody's earning several $100,000 a year, they don't think of a car from a fundamental affordability standpoint. But for the vast majority of people are living paycheck to paycheck. So it actually makes a difference if the cost per month for lease or financing is $10 one way or the other. So it is important to keep improving the affordability and to keep, it's just like making the price more accessible. Yeah, exactly. Make the price more accessible, the value for money better, and to keep improving that over time.
But also to make kick-ass cars that people want to buy.
Yeah, it's got to be a great product at a great price, and the standards for what constitutes a great product at a great price keep increasing. So there's like you can't just be static. You have to keep making the car better, improving the price of it, improving the cost of production, and that's what we're doing.
Yeah, and in fact, like I said in my opening remarks also, like the updated Model 3 is a fantastic car. I don't think people fully even understand the amount of engineering effort which has gone, and Lars and team have actually put out videos explaining how much the car is different when it looks and feels different. Not only it looks and feels different, we've added so much value to it, but you can lease it for like as low as $299 a month.
Yeah. Without gas.
Yeah.
All right. The next question comes from George from Canaccord. George, please go and unmute.
Hi. Thank you for taking my question. First, could you please help us understand maybe some of the timing of launching FSD in additional geographies, including maybe clarifying your recent comment about China? Thank you.
I mean, like new markets? Yeah, there are a bunch of markets where we don't currently sell cars that we should be selling cars in. We'll see some acceleration of that.
And FSD in new markets?
Yeah. So the thing about the end-to-end neural net based autonomy is that just like a human, it actually works pretty well without modification in almost any market. So we plan on, with the approval of the regulators, releasing it as a supervised autonomy system in any market where we can get regulatory approval for that, which we think includes China. So yeah, it's just like a human, you can go rent a car in a foreign country and you can drive pretty well. Obviously, if you live in that country, you'll drive better. And so we'll make the car drive better in these other countries with country-specific training. But it can drive quite well almost everywhere.
Yeah, the basics of driving are basically the same everywhere. Like, car is a car, traffic is a traffic light, road is the road.
Yeah, it understands that it shouldn't hit things no matter where it is.
Exactly. There are some road rules that you need to follow. In China, you shouldn't cross over a solid line to do a lane change. US is a recommendation, I think. China, you get fined heavily if you do that. We have to do some adaptations, but it's mostly smaller adaptations, not like an entire change of stack or something like that.
Yeah.
Hey, George, do you have a follow-up?
Yep. So my follow-up has to do with the first quarter deliveries, and I'm curious as to whether or not you feel that supply constraints that you mentioned throughout the release impacted the results, and maybe can you help us quantify that, and is that why you have some confidence in unit growth in 2024?
Yeah, I think we did cover this a little bit in the opening remarks too. Q1 had a lot of different things which were happening. Seasonality was a big one, continued pressure from the macroeconomic environment. We had attacks at our factory. We had Red Sea attacks. We're ramping Model 3. We're ramping Cybertruck. All these things are happening. I mean, it almost feels like a culmination of all those activities in a constrained period. And that gives us that confidence that, hey, we don't expect these things to recur.
Yeah, we think Q2 will be a lot better.
Yeah.
It's just one thing after another. Yeah. Our attacks are crazy.
Yeah, exactly. It's just, if you've got cars that are sitting on ships, they obviously cannot be delivered to people. And if you've got excess demand for Model 3 or Model Y in one market, but you don't have it there, it's an extremely complex logistics situation. So and I'd say also we did overcomplicate the sales process, which we've just in the past week or so have greatly simplified. So it became far too complex to buy a Tesla, whereas it should just be you can buy the car in under a minute. So we're getting back to the you can buy a Tesla in under a minute interface from what was quite complex.
Okay, thank you. Let's go to Colin Rush from Oppenheimer. Colin, go ahead and unmute, please.
Thanks so much, guys. Given the pursuit of Tesla really as the leader in AI for the physical world, and your comments around distributed inference, can you talk about what that approach is unlocking beyond what's happening in the vehicle right now?
So do you want to say something?
Yeah, like you mentioned, like the car, even when it's a full robotaxi, it's probably going to be used around 50 hours a week.
That's my guess, like a third of the hours of the week.
Yeah, it could be more or less, but then there's certainly going to be some hours left for charging and cleaning and maintenance. In that world, it can do a lot of other workloads. Even right now, we are seeing, for example, these LLM companies have this like batch workloads where they send a bunch of documents, and those are run through pretty large neural networks. Take a lot of compute to chunk through those workloads. And now that we have already paid for this compute in these cars, it might be wise to use them and not let them be idle. Be like buying a lot of expensive machinery and letting them be idle. Like we don't want that. We'd want to use the compute as much as possible and close to like basically 100% of the time, make effective use of it.
That's why I think it's analogous to Amazon Web Services, where people didn't expect that AWS would be the most valuable part of Amazon when it started out as a bookstore. So that was on nobody's radar. But they found that they had excess compute because the compute needs would spike to extreme levels for brief periods of the year, and then they had idle compute for the rest of the year. So then what should they do with all that excess compute for the rest of the year? That's kind of
monetize it.
Yeah, monetize it. So it seems like kind of a no-brainer to say, okay, if we've got millions and then tens of millions of vehicles out there where the computers are idle most of the time, that we might as well have them do something useful.
Yeah, exactly.
And then, I mean, if you get like to the 100 million vehicle level, which I think we will at some point get to, then, and you've got a kilowatt of usable compute, and maybe you're on hardware 6 or 7 by that time, then you really, I think you'd have on the order of 100 gigawatts of usable compute, which might be more than anyone, more than any company, probably more than any company.
Yeah, probably. Because it takes a lot of intelligence to drive the car anyway. And when it's not driving the car, you just put this intelligence to other uses, to solving scientific problems.
Just like a human.
Or answering dumb questions for someone else.
We've already learned a lot about deploying workloads to these compute nodes.
Yeah. And unlike laptops and our cell phones, it is totally under Tesla's control. So it's easier to distribute the workload across different nodes as opposed to, asking users for permission on their own cell phones would be very tedious.
Well, you just drain the battery on them.
Yeah, exactly. The battery is also limited.
So that, like, technically, I suppose like Apple would have the most amount of distributed compute, but you can't use it because you can't get you can't just run the phone at full power and drain the battery.
Yep.
So whereas for the car, even if you're a kilowatt level inference computer, which is crazy power compared to a phone, if you've got a 50 or 60 kilowatt hour pack, it's still not a big deal to run.
If you're plugged in,
whether you're plugged in or not, you could be plugged in or not plugged in. You could run for 10 hours and use 10 kilowatt hours of your kilowatt of compute.
Forever.
Yeah.
Already got a built-in liquid cooled thermal management.
Yeah, it's exactly
expense for data centers. So it's already there in the car.
Exactly. So it's distributed power generation. It's just distributed access to power and distributed cooling, and it's already paid for.
Yeah, I mean that distributed power and cooling, people underestimate that costs a lot of money.
Really big deal.
It does.
Yeah, and the capex is shared by the entire world.
Yes.
Sort of everyone owns a small chunk, and they get a small profit out of it, maybe.
Yeah.
Thanks so much, guys. And just my follow-up is a little bit more mundane. Looking at the 4680 ramp, can you talk about how close you are to target yields and when you might start to accelerate incremental capacity expansions on that technology?
We're making good progress on that, but I don't think it's super important for at least the near term. As Laura said, we think it'll be, exceed the competitiveness of suppliers by the end of this year, and then we'll continue to improve.
Yeah, I mean, I think it's important to note also that the ramp right now is relevant to the Cybertruck ramp.
Yeah,
and so we're not going to just randomly build 4680s unless we have a place to put them, and so we're going to make sure we're prudent about that. But we also have a lot of investments with all our cell suppliers and vendors. They're great partners, and they, done great development work with us. And a lot of the advancements in technology and chemistry we found in 4680, they're also putting into their cells.
Yeah, I mean, a big part of the 4680, in terms of doing internal cells, was a hedge against what would happen with our suppliers. Because for a while there, it was very difficult because every big car maker put in massive battery orders. And so the price per kilowatt hour of lithium-ion batteries went to crazy numbers, to crazy levels.
Bonkers.
Yeah, just bonkers. So, okay, we've got to have some hedge here to deal with, cost per kilowatt hours numbers that would double what we anticipated. If we have an internal cell production, then we have that hedge against demand shocks, with too much demand. That's really the way to think about it. So it's not like we want to take on a whole bunch of problems that just for the hell of it. We did the cell program in order to address the crazy increase in cost per kilowatt hour from our suppliers due to gigantic orders placed by every car maker on Earth. So
Okay, thank you. And the last question comes from Ben Kalo from Baird. Ben, go ahead and unmute. And you're still muted.
Well, I once again would just like to strongly recommend that anyone who is, I guess, thinking about the Tesla stock should really drive FSD 12.3. You can't, it's impossible to understand the company if you do not do this.
All right, so since Ben is not unmuting, let's try Shreyas Patel from Wolf Research. Final question.
Oh, hey, thanks so much. Just, Elon, during the Investor Day last year, you mentioned that auto COGS per unit for the next-gen vehicle would decline by 50% versus the current 3 and Y. I think that was implying something around $20,000 of COGS. About a third of that was coming from the unboxed manufacturing process. But I'm curious if you see an opportunity that some of the other drivers around powertrain cost reduction or material cost savings, would those be largely transferable to some of the new products that you're now talking about introducing?
Yeah, sure. I mean, in short, yes. I mean, the unboxed manufacturing method is certainly great and revolutionary, but with it comes some risk because, it's new production lines, not. But all the subsystems we developed, whether it was powertrains, drive units, battery improvements in manufacturing and automation, thermal systems, seating, the integration of interior components, and reduction of LV controllers, all that's transferable, and that's what we're doing. Trying to get it into our products as fast as possible. And so that engineering work, we're not trying to just throw it away and put it, in a coffin. We're going to take it and utilize it to the best advantage of the cars we make and the future cars we make.
Okay, great. And then just on that topic of 4680 cells, I know you mentioned it. You really thought of it more as like a hedge against rising battery costs from other OEMs, but it seems even today, it seems like you would have a cost advantage against some of those other automakers. And I'm wondering, given the rationalizing of your vehicle manufacturing plans that you're talking about now, if there's an opportunity to maybe convert the 4680 cells and maybe sell those to other automakers and really generate an additional revenue stream. I'm just curious if you have any thoughts about that.
Right. What seems to be happening is that unless I'm missing something, the orders for batteries from other automakers have declined dramatically. So we're seeing much more competitive prices for cells from our suppliers, dramatically more competitive than in the past. It is clear that a lot of our suppliers have excess capacity.
Yeah. In addition to what Elon said, this is Karan, by the way. In addition to what Elon said about 4680s, what 4680 did for us from a supply chain perspective was help us understand the supply chain that's upstream of our cell suppliers. So a lot of the deals that we had struck for 4680, we can also supply those materials to our partners, help reducing the overall cost back to Tesla. So we're basically inserting ourselves in the upstream supply chain by doing that. So that's also been beneficial in reducing the overall pricing in addition to the excess capacity that these suppliers have.
Yeah, no, I mean, this is going to wax and wane, obviously. So, there's going to be a boom and bust in battery cell production, where production exceeds supply, and then supply exceeds production, and back and forth, kind of like, I don't know, DRAM or something. So it's like what is true today will not be true in the future. There's going to be somewhat of a boom and bust cycle here. And then there are additional complications with government incentives, like the Inflation Reduction Act, the IRA, which I always found like a funny name for a
comical name.
Yeah, is it like the Irish Republican Army, the Internet Research Agency from Russia?
Independent retirement account.
Yeah, exactly. Roth IRA. And it's like forced Spider-Man situations, which IRA wins. So, but it does complicate the incentive structure, so that there is perhaps there's stronger demand for cells that are produced in the U.S. than outside the U.S. But then, how long does the IRA last? I don't know.
Which is why it's important that we have both in cells and vendor cells to hedge against all of this.
Yeah.
Okay, thank you very much. That's all the time we have today. But at the same time, I would like to make a short announcement. And I wanted to let the investment community know that about a month ago, I met up with Elon and Vaibhav and announced that I'll be moving on from the world of investor relations. I'll be hanging around for another couple of months or so feel free to reach out anytime. But after this 7-year sprint, I'm going to be taking a break and spending some good quality time with my family. And I wanted to say that these 7 years have been the greatest privilege of my professional life. I'll never forget the memories from, I started literally at the beginning of production hell and just watching the company from the inside to see what it's become today. And I'm especially super thankful to the people in this room and dozens of people outside of this room that I've worked for over the years. I think the team strength and teamwork at Tesla is unlike anything else I've seen in my career. Elon, thank you very much for this opportunity that I got back in 2017. Thank you for seeking investor feedback and regularly and debating it with me.
Yeah, well, I mean, the reason I reached out to you was because I thought your analysis of Tesla was the best that I'd seen.
Thank you.
So, yeah, thank you for helping Tesla get to where it is today over 7 years. It's been a pleasure working with you.
Thank you so much. And yeah, thank you for all the thousands of shareholders that we've met over the years and walked around factories and loved all the interactions, even the tough ones. And yeah, looking forward to the call in the next 3 months, but I'll be on the other side listening in. Thank you very much.
Thanks.
Elon probably fired him before the call. He said like,
Tell him. All right. This is why you don't fucking bet against Elon motherfucking Musk, okay? This is why.
Right, coming for scalps.
Who is that? Was that a goat? Is that a goat? No, I swear, I thought you had a goat here, Vitaly.
That would have been the most epic.
That would have been the most baller thing.
Get down there. It's a goat joke. You don't get it?
I don't know about you guys, but I'm up 700% in 2 hours on my derivatives.
And damn, I should have bought some options.
This is why I call myself Derivamit, for those that don't know. This is why I fucking do it, because you got to be a different breed to get these types of gains, you know? You just got to be a different breed.
So you're up 700% on $30.
That means I'm up $200.
Pretty good. Pretty good.
You could get 1 month of 2 months of FSD.
So for those that are going to be here on the market open tomorrow, I'm going to give, if I can get these options to fill, because the implied volatility is going to be a bitch tomorrow. I'm going to take the profits. I'm going to give away the $200 in Amazon gift cards in the morning for figure out how to give it away if they can fill. So tomorrow morning, if you come, we'll give away the gains. What did you guys think of the call? Let's start with Neil. What are your raw thoughts?
Pretty good. Pretty good. I mean, he sounded quite energetic, happy, despite everything that's going on. He didn't ramble about stuff that wasn't that important that many times. Some jokes here and there, IRA, fine. I mean, okay. Did give us some good information, which we're going to talk about in just a bit. But overall, it's a good call. He got the message, I think. He got the message and he delivered. He delivered, I think, 90+% of what we wanted to hear.
Okay, V, your thoughts on the call? Did Elon do a good job?
Yeah, I mean, honestly, every time I hear him talk, when he talks about engineering and Tesla and not all this other shit on Twitter, I get bullish every time he speaks about actual, like, just the future. You know what I mean? Like, he really knows how to sell you the future if you believe him, of course. But I think he flipped the narrative. Like, so I know the stock might crater or whatever happens, but as it's going up right now. But I think what he changed was like, hey, we're making the car. We're going to do it earlier. We're going to start on our current line, so we maximize that before we build out anything else and keep capex down. I thought that was important. So it's not making me bearish. It's not making me think it's going to go to $100 unless he flips the narrative again. But it sounds like he's doing what Wall Street sort of wanted him to.
I'll talk real quick, and then Carlos, I'll let you talk. I think Elon did a great job because he hit on everything that Wall Street cared about. We didn't really get an answer to this $25,000 card. They kind of brushed it off, but I guess the answer muddled in there was autonomy matters more. And it seems like based on after hours price action, the street is believing Elon at his word. Elon has said what he said in this earnings call, just from me listening to interviews, and I'm sure, Carlos, you can attest to this, like a trillion times. It's not like anything's new, but I think shareholders are just like little babies, right? They need to have therapists massage them. It's like at the end of the day, he needed to say it again, and he said it in a way without stumbling and stepping over his words, and shareholders believe him, and I think that's why the stock is up. Carlos, what do you think he did on this call?
I give him an 8, right? Out of 10, I give him a solid 8 out of 10. He had a little bit of a rambling about how many cells it takes to make a human being in bacteria, but like, all right, you give him one of those. I think he did the right thing for the stock. He did answer. There's a lot in here. I took some notes, and I just want to go over some of the just little things that we may have lost. We might have Optimus in production by the fact in this same factory by the end of the year. We may be able to sell them by next year. Optimus will be more valuable than everything else combined. There will be no limit to the economy. That's what's going to happen. The way he said that was funny. Tesla's AI inference. This is something we've never discussed. An AWS type service where they can actually rent out inference compute on the cars. That's interesting. The regulatory thing, I think he answered that and kind of killed that. I mean, to me, he sort of settled this idea that regulation is going to be something that holds back robotaxi. I mean, he actually gave credit to the competitors. And he was really clear about this. Listen to this. Airbnb and Uber. It's going to be more like an Airbnb like Uber. Let me be clear. Tesla will be operating this fleet. It will be like Airbnb and Uber. We will have cars of ours, and we'll be supplemented by cars by owners with complete permissions on how your car is used or have it come back. Have your friends, family, only people with 5 stars, blah, blah, blah. And then he doubled down and said, it's very difficult to compete with Google because they have such a high data lead and a feedback loop. This is the same as Tesla. It is very difficult to compete at scale. To compete at that level is difficult to comprehend. And then he said hardware 5 is being designed and will already be shipped into the cars by the end of the next year. Tens of millions of cars. They're already talking to one automaker right now about licensing FSD. I suspect that they'll announce that on 8/8, that it's Ford. He said, we will have higher sales than we did have last year. He said, don't believe in Tesla if you do not believe that we are and will solve autonomy. And he says, if we hit certain revenue metrics, we will buy back shares. That's a lot. That is a lot on a call when the overall metrics were bad. That's a lot of info to get out of the guy. Clear answers. And he parried a lot of the stuff that I think we're going to get clarity on 8/8. So overall, I was good. Thanks, Elon. 8. I'll give you an 8.
It was a good call. I think it was a good call. Chris, did you get to hear the call? Did you see the results? What are your thoughts?
I watched you guys the entire time.
Okay.
You are about to discover what Ivy Crush looks like. I don't know if you know what that is.
No. So I follow this options guy on Twitter. He just responded. He's a really good guy on Twitter. He said, I hate to break to you, Amit, if Tesla opens at 160, this option will be at a loss. The Ivy will be crushed tomorrow. Unless Tesla's 175, the gap between 160 and 185 is too large.
Yeah. So this is one of the things that you shouldn't do is right before earnings and have an expected move that's way below what your price target is, right? You basically handed the guy on the opposite end $30 for basically.
Well, what if it gets to 175?
It could. There's a risk to it. I can't say that there isn't, but the chances of it happening are very, very low. So we'll see what happens.
What's the volume and open interest on that contract that you?
Dude, there was like 20,000.
All right.
There was so many. I was like, I guess we're all gonna be degenerates. Fuck it, $30.
Right.
I thought it was a good call in terms of like stirring up high expectations. I didn't like the fact that they're not necessarily addressing the elephant in the room, which is the deteriorating numbers. I mean, yeah, I guess that's the job of a CEO to just make you feel good about the company and where it's headed. But I don't know. I for one saw a lot of this as smoke and mirrors. Nor I wouldn't necessarily invest in Tesla right this second based on the stuff that he said, because it's just a lot of we're gonna do this and we're gonna do that and we're gonna do that, blah blah blah. And it's like, okay, well, I'll invest when I see that kind of like panning out. I don't need to buy hopes and dreams. I need to buy reality. So if he is able to get a lot of this stuff together, and you know what, maybe this is one of those things that I need to take a drive in the full FSD feature car. Maybe I'll understand the stock a little bit more and the future of it more. And I'm not talking about, okay, take like a 5-second test drive. I'm saying, you know what, go from one part of the city to another part of the city and see how far away they are. If they are really far away, then it's like, okay, I can wait. If they're pretty close to solving autonomy where the amount of interventions is very low, then maybe there's something there. But as of right now, I would not be rushing to buy the stock, especially with the current EV market the way it is, the current interest rates the way they are. So, yeah.
Well, let me ask this question, because I think we can all agree the numbers suck. Operating income down to 5.5%. I mean, it's pretty atrocious, these numbers, but it's up 10% because it was down 40% year to date. I think that's one thing. And then the street seems to have just like agreed that autonomy is the future, which is very weird to me. And this is why I feel maybe this is a bull trap. The street for the past month has said, we don't give a shit about FSD or robotaxi. Give us the numbers. Now you're telling me in 2 hours, the street is like 10%. We love FSD and robotaxi. What do you think is the psychology going on with investors after hours in terms of why they're buying up the stock?
Neil, you had something to say? Sorry, shaking your head.
Yeah. No, two things. One, when he said that sales is expected to be higher this year than last year, I have no clue how, but okay.
Yep.
Let's find out. And two, the sentiment switch, I think we touched on that before the call. It's them finding value already in Tesla at $140 or so. But the uncertainty of what happens with the newer products, other than the autonomous vehicles, they got that now on top, and they're saying, okay, we got the value 140, now we can add more premium to the rest of it because there is more certainty about what's going to happen in the next 12 months.
They also stressed multiple products on the same platform.
Yes, that is true. Cybervan.
Right. So Wall Street's looking for, they want that $25,000 compact Camry, and they're like, whoa, another vehicle, multiple platforms, and they're being accelerated. So I think a lot of the negative press that they got because they felt they were canceling the vehicle, like they never actually canceled the vehicle. And as a matter of fact, it was actually moved up. It was actually accelerated. This is a good lesson. The next time you start hearing a lot of FUD around Tesla about what's certain, what's going to happen, it could actually be the exact opposite. This vehicle is actually supposed to be coming faster. Which, if you combine it with him knowing where the vehicle's, where FSD build's going to be in 3 to 6 months, tells me that robotaxi, that robotaxi followed by we might get a couple of vehicle announcements this year. Like they might come very quickly from this point.
Just want to point out the FUD was created by Amit. A lot of it.
No, it was by Reuters, but Amit definitely I think all of us believe the FUD, dude. But it's interesting. I think Reuters was still kind of right because Elon didn't give a timeline on this car, but they did say it's going to happen before the end of 2025. So I guess that's the objective timeline that the street's excited. And if that happens, then they're ahead 6 months on schedule, which is good.
Look, really for the people that think that I'm like the eternal Elon fanboy, here's the stuff that was complete bullshit on the call, or like let's get real, okay? The AWS.
I saw him say that. He did say that.
I'm like, it's one of those things where it is technically possible, but do you see them having meetings about this right now? No, they're not doing that. The other thing, the idea about Optimus going into production this year, I don't think so. I'm not buying that either.
It's weird you don't buy that, but you buy his timeline for full self-driving to be
because
there's more data on full self-driving than
Optimus. We've been working on that. I mean, they've been working on it so much, and because you guys might not agree, but that 12.4 to me was Tesla's FSD ChatGPT moment where the improvements accelerate from here, and we'll look back and say that was the moment that FSD was technically solved. The bot is nowhere fucking near that.
Yeah,
nowhere near that. It really does need to do some useful tasks. So
at least the CFO didn't say that it's useless on the call. That was good. No one fucked up on the call. No one fucked up, which is
no.
good.
But you heard they were nervous, dude.
They were definitely nervous. You could tell Elon had a fucking gun to their head every time they said something to make sure they didn't fuck up.
The CFO,
well, they were fired, plus the guy left.
Yeah,
right. The CFO almost said something about the Model 2 at a certain point in there, and he caught himself.
Yes.
When he was all excited at the end, talking about all the great things that are happening at Tesla, he almost said something like, all right, that would have been totally fired.
Here's a question: What did you guys think the actual numbers like for Tesla?
They were disgusting,
like, overall?
It was so bad, dude.
Yeah,
I can't find a single number that's exciting here. I'm gonna pull it up again.
There was one statistic. The energy division reached a new all-time.
Yeah, energy superchargers.
Right. Yeah.
Mhm.
Because
The
now
problem is none of those had an impact on any of the top line numbers.
but the point is, again, future
Not
forward,
yet.
moving
That's
in the
right.
right direction.
Yeah.
And he said we're opening it up. We're going to have Fords on it and blah blah blah. How many quarters until we start actually looking at their revenues from
So
energy?
this is the first quarter where they've had negative year-over-year sales growth, right? Not
Correct.
quarter-over-quarter, negative sale year-over-year for about 13%. I think the bigger thing that I saw that actually is a little bit more worrisome is going down, further down, and you see that right there, that margin going from literally 11% to 5%. That means it's a 500 basis points drop in March, almost 600 basis point drop. That's a 6% drop. And that means not only is your revenue declining, but the margins are declining on top of it. So
Margins
that's,
weren't
you
that
know,
much less. I'm saying the gross automotive margins were only like 0.2 off. They were not lower that much.
well, no, I'm saying the point is these are automated, like, okay, this right here, the margins that they're showing, these are traditional automaker margins. Okay.
But that's
So
not
all the
gross.
other ones,
That's
so
not
if you're
gross
trying,
margin on the cars though.
say that again.
That's not the gross automotive margins on the cars.
No, but the thing is, that's a business, right? If you look at Ford and that, you can say, well, look, the gross automotive margin on the car that we sell is vastly different from the services revenue that we get for, let's say, you know, at the dealership for providing services. You know, that's why the business model of most of these car companies isn't when they make the point of sale. It's when they actually do all the servicing and the end products and all the other stuff that comes with it. The point is, the valuation of this thing should be, if you're valuing it like an automaker, it should be valued much, much lower than it is today, just based on raw numbers, not based on expectations of all these other technological improvements. So I like I said, I see this thing. I'm glad that they're doing well in terms of stock price today, but I think that you really gonna have to take this, take all the stuff that Elon said with a grain of salt, because if the numbers don't prove out, then every quarter you're gonna be dealing with this bullshit until the tangible impacts of the FSD.
But
and
here's
all
the
other
question,
stuff
Chris.
coming in.
You're right that this is all bullshit and it's going to take a lot of time for these numbers to get better. But why do you think the stock's pumping after hours? Do you think investors are overlooking?
Because it's a retail heavy stock with all the expectation. I mean, look, Elon and Team Tesla are hopes and dreams, right? A lot of people that invest in them are investing in this is going to be the most valuable company on the planet one day, not necessarily, hey, I care about numbers and fundamentals. I mean, maybe the big guys are more concerned with that, and I do see them getting a crap ton of downgrades in the next couple of days. Like, you're definitely going to see all the Goldman Sachs and the Morgan Stanleys reprice this thing down to below 100, in which case I think we get back to 144 at some point, or maybe even further lower than that. That's just right now. Be careful buying into the euphoria. That's all.
Well, that I would agree with. That I would agree. Let the thing stabilize for a second. Let the news sit for a couple of days. But I think fundamentally it's mispriced. If you're pricing like a car company, you're right. But we discussed this before the call. That's $100. That's what Tesla is without Elon. Elon there, he does not see it fundamentally as a car company. He said it before. He doesn't see a distinction even or a separation between his companies. So he sees it as this access to all this intellectual capital. And he's funneling what he thinks, the projects that he thinks are correct through Tesla. That is why I think 144 was held, even though the numbers do not support that.
Yeah. And by the way, don't want to generalize, but if everybody's looking at the same graph, we're all seeing the last time it went under it, right, at $106. But back then you had like Elon sending billions and billions of dollars of stock to buy Twitter, plus super bearish market that added to the pressure. Right now, I don't think we're in that selling environment, even though the business now is worse than before, of course.
Well, the thing is, they were growing it. Yeah, exactly. You just said it. They were growing still at the time. The margins were still high. They were double-digit margins at the time, right? And their top line was still growing. This is a completely different paradigm shift. You've got declining numbers with declining margins. I mean, revenue going down with margins going down is not a good thing. Like, that's a recipe for disaster. Now, how does Elon arrest that? I don't know. I don't
FSD.
know when these
Gotta make
when
FSD
these new
work.
products come
They
out.
addressed this.
Yeah.
He addressed this. They talked about expensive line items, expending that they did this particular quarter that they don't necessarily have to do in the quarters to come. And they also said because of the other EV makers lowering their guidance, specifically say with battery manufacturing, they do expect to have an increase in the regulatory credits going forward.
Yeah.
So they did address some of it. I'm not trying to say it was a great quarter. I'm just saying they did address some of this. I mean, it sounds like they got the admin to the this quarter.
They've now put the bar a bit higher than before. So in the next coming quarters, they definitely have to deliver because, I mean, they can repeat it once more, but that's about it.
Right.
But of course, after Q2, you already have the 8.8 event, which now I believe we're going to see a product reveal because, I mean, he did hint about that during the call. So we'll see.
Someone asked me, someone said a very interesting question. What's the price target that you would start buying Tesla? And the thing is, like, there's no real valuation that you can put on this company that makes sense because the company fundamentally doesn't trade based on any sort of tangible valuation. It trades more on sentiment than it does on real valuation. So I don't think that there's a price target that you can give it. The only thing that I could probably trade this on is sentiment and momentum. So the best way that I would trade this is first let a product that's somewhat successful come out and then buy into it, even if it means you're paying a high valuation. And the example that I'll give is if, let's say, they come up with a robo-taxi network and they do a limited run. They're not going to say, okay, you know what, robo-taxi is available everywhere tomorrow morning. Like, no, just let them come out with a robo-taxi network in a limited run. And if you find that limited run to be very successful, highly successful, then you start buying no matter what the price is, because that means that eventually they're going to scale up to the point where that product is going to be super successful, right?
I wonder when Tesla will come out with a successful product. I'm curious.
No, I'm saying that
you intrinsically don't get what they're doing. And Elon even said, if you're valuing us like a car company, you shouldn't be investing in it. He clearly even said that.
So they were very ahead on EVs. They got very lucky in that they really got into the consumer demand, but the consumer demand portion of EVs has fallen off. So you need that next growth prospect right now. See, when we looked at Tesla in the past, Tesla was a growing company with a industry that is a new industry that's getting bigger and bigger. Right now, EVs are contracting. The main business which the company is generating money on is contracting right now. So right now, that's why Elon is pivoting, because he sees that, hey, if I'm only a pure EV player, I am not going to be able to get the growth like valuation. So I need to get into growthier industries. Now, where's that growth industry coming from? It's going to come from software. Software
first of all, this is not day one of Elon pivoting. Okay, this is not like, oh, I got this new product for you. He's been talking about this for a very long, 14 years probably. Okay, so that's number one. Number two, have you used FSD? You've said you haven't.
No.
Why don't you go try it? I literally drive my car. Look, there are problems. I'm not saying it's perfect. 99.9% of the way, it is perfect. Okay, it gets me 2-hour drive where I don't have to process every single turn, seeing how fast I'm going. It's an amazing, amazing technology. In fact, I'm looking at all the cars around me. A lot of them are Teslas now driving by me, and I'm curious, are they using FSD actually? Like, I look into the other Teslas passing by. I'm like, I wonder if they're sitting there thinking about other things besides driving. Do you know what I'm saying?
What you'll see inside those Teslas are a Patel. Especially in New Jersey.
This is a curious
if you want to bring,
question.
hold on. If you want to bring up a stat, there's actually more men with Teslas than women, which I don't know why. I see more men driving Model Ys and 3s. Anyway, but I see this all around me. Then I see all these old ICE vehicles, and I literally look around and I'm like, oh my God, they're all dinosaurs. They're all dying, and they don't know it. So what is your end game here, Chris, that you don't understand where this is going, that you keep staying bearish on something that, yes, is down this quarter and next, and maybe a year, maybe two? What happens in 5 years? Is Tesla dead? What happens in 5 years to this company?
Well, that's the thing. I don't know. I don't know if it's going to still be. First of all, FSD and all these other things, they're really good. But I am not in the business of sitting on dead capital for the next 4 years until they figure this thing out.
So you think you can catch the turnaround?
No, I don't think
you
that.
are
I
of the
think there's
opinion
an opportunity.
you're going to get that.
What it sounds to me like he's saying is and he's right. We talked about this on the phone before we got on the call, that there is a cost of letting the capital sit there while you're waiting. You want to get your position. It's like, if you want to be in the front row of the concert, how many hours before the show do you got to get there? And that's the idea. And you have to ask yourself, is that juice worth the squeeze if there's other opportunities? There's nothing wrong with saying that. But I also agree that the way that you see the company, Chris, is just not the way that, say, someone like me or
No, I agree. I think fundamentally, when it comes,
we don't have to convince each other.
When it comes to investing, each
you're
one
on
of us,
bro, you're there, we're there.
What I wanted to say is, when it comes to investing, I think all of our styles are different, and because of that, it may seem like, okay, Chris is bearish for this reason and he's not bullish for this. I just use my set of logic. You guys are using your set of logic. You guys have, hey, I see the product. I see it becoming more ubiquitous. I have a product. I think it's great. I am not in that camp. So I don't necessarily see it that way. And that's the thing. Like, everyone invests with their style and their confidence.
Right.
That's all. There's not,
I just buy options that expire in a week. That's all I do. And I get rich off 700% gains.
He's like, man's like, I just get gains.
I just get gains, dude. I don't give a fuck about this all. I just get gains.
I want to know what Neil. Neil. Well, what do you think is happening here? I think you're a bull on Tesla, right? If I'm correct, you have Tesla stock, I believe.
Number one position, yeah.
Number one. Okay, so obviously, but I mean, even with, let's say, the next 2 years are dead money, is this like just a loser stock to be in for 2 years, and we should just come into it in 2 years when things are turned around and we see robotaxis on the road? Is that the time to enter?
I actually would say yes. I'll speak real quick, Neil.
Go.
You got it. You got it.
No, go ahead.
Neil, man. I asked Neil.
No, I would just say yes, because, dude, it's at what, 500 billion? You want to get this to $1 trillion? Like, another $500 billion is not easy to get without FSD. So if FSD is not solved for 2 years, you're still sitting on dead money.
But once again, me and you can make assumptions all day long, of course, but we actually don't know a timing of any of this. All right,
that's true.
But go ahead, Neil.
I do, and I said it was this year. Remember, Vitaly, we bet $100.
Hey
The
guys,
only thing I'm betting on is that Carlos is wrong this year. That's the only thing I'm betting on. Okay, Neil, I'm sorry. Everyone stole the thunder from you.
No, it's fine. I mean, by the way, I may check the private DM so we can look at Emir's value of Tesla. No, but if we can make like these statements, if we know for sure that we have to wait 2 years, then of course, why buy it now if you know that in 2 years you can buy it and you still have the upside? But we don't know.
Right.
We don't know. I don't think it per se needs robotaxi in the next 2 years for it to go up. It will definitely need robotaxis to reach those 3 trillion, 4 trillion, whatever. But until then, sell more cars, best in class margins, energy side of the business grows, supercharging network grows, services, insurance. I mean,
there is a lot to be bullish on.
Not too bad.
I think we talked about this, and Neil, you weren't on that podcast, but I think Carlos definitely mentioned it, or somebody did. When Tesla finally has this master plan happen, imagine like one day you get your insurance from it, it drives you where you want to go. It's robots as a service. Like, if all of these things start to collide sometime, who knows when? Like, how are you going to catch that? That's always my thing. Like, if I'm not invested now, how am I going to know when that is all going to happen? Like, yes, you'll see little signs here and there, but I think the run up will happen so fast we'll miss it. Like, as soon as
Vitaly, I'm pretty sure you're going to get 10 tweets from Amit fucking at 3 a.m. that tell you.
No. I mean, the thing is, like, things move so fast. For example, when me and you were talking about Bitcoin at 15,000, 20,000, we're like, this is obviously going to turn around at some point. But when Amit started believing in it, it was already $60,000. Like,
hey. No. It was 59,900.
No, but you see my point. The point is, nobody believes like, oh, it's moving, it's going to pull back, something's going to happen. This is why you have to get in early when people don't believe. If it's already there, it's in front of you, and they're driving around, I think the upside is gone. There's no point, honestly.
I agree with that.
Yeah, but that's for the type of person that has Tesla as a number one position. Like, there's a lot of people that just want to have it as a 4 or 5% position, and they feel more comfortable holding in video. They feel more comfortable holding, like,
that's fine. Yeah,
just different people are different.
Yeah, that's the thing. If you don't believe in it,
there
are plenty of other great companies to invest in. You don't have to take Tesla, which is highly entertaining on both sides. So yeah, I mean, if you don't believe it, just don't buy it.
No. What bothers me is not that they don't buy it. What bothers me is that people like Chris tweet all day about it, and
No,
just
but
bring up the fact that it's a car company all the time without it, with ignoring what the energy side of the business, ignoring the supercharging, ignoring that the NACS adapter has been adopted by everybody, ignoring that 12.3 is out. I mean, look, I could be bearish short term, but what's happening here is pretty obvious. Like, Tesla's going to take over this whole fucking market. It's just a matter of time. I don't know when this is going to happen. Like, I might have to wait 5 years. That's true.
In his defense, he said that when the thing was $300, and so he's been right. Like, you're right about the long-term case, but he's been right that if you've been buying 300 and down,
Oh, no. Well, first
you've
of all,
got
I
a
agreed with that.
crappy average, right?
I
Like,
do
that's
agree
the
with
problem.
that. No. No one's saying just buy willy-nilly at any point, but now we're heading to the point where it's becoming to make sense.
Right. But see, this is the nuance in investing, because you're like, you said 17 things that are amazing right now. If you believe those things at $300, you're fucked. You're down 50%. It has to go up 100% for you to break even.
How many people on X do you
That's the
see
hard part
now-
about this, right?
How many people you see on X that went all in $414 and they're just still waiting to be made whole? It's
So-
not, the thing is,
Yeah.
holding a stock is not the same as like if my house value goes down below what I paid for it, I'm still enjoying it. I still live in it. You know, I can rent it out. Like, there's a lot of things I can do sitting on dead money, right? But it's hard when you're holding a stock, especially once it gets that big and you're like, when the fuck is this?
That's why
gonna
I think the nuance is important. Vitaly is right long term. Like, Tesla's winning, but if you got in at these high prices, it's up. Now, the answer Vitaly would say is just DCA, which I get it. It's hard for a lot of people, right? How much are you going to DCA until?
Well, so this is the question, like, people in the audience. Okay, so let's say it hits $100. Are you going to dump your whole life savings into that $100?
Most
Like,
people won't.
like, I mean, there are some people who can do that, but
Yeah.
I wouldn't feel comfortable. Like, I'd rather just buy it all the way, a little bit down, a little bit up over the next 2-3 years as we stagnate in between $100 and $300. We're somewhere in the range. And then I don't feel that big pressure. If I dump like 200,000 right now at 160 into Tesla, right this second, I couldn't sleep tonight.
Yeah, you couldn't sleep. Yeah.
Bottom line. So I don't know who, maybe very few people can do that. And I don't think most of the audience can do that.
Let's ask a really quick question, really fun question. If Tesla was down 10% right now, how would we be feeling? This was
Better.
at 130.
I'm starting to my DCA, so I would feel better. Like this, I don't want to DCA as it goes up. I like DCAing things as they drop. In fact,
my take on the call and the 8/8 event, the future of the company, doesn't change based on
the stock.
based on what the stock is doing right now.
Twitter would be so upset if this was down at 130, dude. Twitter, right now everyone's excited. They're like, yes, Elon, but if this was down 10%.
But that's the thing. It's so weird. Like, some people are just looking at it without even listening to what Elon says. Like, the stock is up, everything must be rosy. But no, the numbers sucked.
The numbers sucked. Yep.
Yep.
But
I don't know what the point was.
It was
I
250 not too long ago. Like, we're all happy now at 150. This shit.
no,
was
it's
$250
dumb, right?
not
It's
too long
dumb.
ago.
It was $200 like a month ago. I mean, it's
You know what I'm
dumb.
saying? Like, it's weird how, like, you get
188
levels that it's like now we're feeling great about seeing 160 again because you expected 130.
Dude, 185 this Friday. My calls are gonna make like 3,000%. It's gonna happen.
All right.
I got 3
You're
days
the
left,
epitome of the short-term trader. Okay.
I've got 3 days left till 185.
I do got a jet, but I do want to end on this because I think this one that one slide really puts into perspective about how Tesla sees themselves. Look, I've been inside companies when they prepare these decks. These things are so scrutinized, and everything here is completely intentional. And if you just look at the way that they're positioning the entire company, it all comes down to the bot with the Dojo computer or whatever, whether it's theirs or NVIDIA. You've got the FSD supervised, the chips are feeding that, right? And it's also feeding the humanoid robot. In the middle, you've got charging, you've got the vehicles here to the ride hailing, FSD service. I mean, this is the company. You know, this is not just a car company.
I do want to point out.
Like, I mean, a car is one or two graphics on this screen.
No, it's like having it. It's the iPhone moment. The Model Y is the iPhone moment, in my opinion, because like someone just said, was it Atil? I am buying a Tesla Y after trying FSD for an hour yesterday. And so this is what it is. I use FSD every day now. How can I go back to my Toyota RAV4? I don't care if it's cheaper. How can I go back to a car that doesn't drive me from A to B? Even if there's problems. Say that again? And I charged it at home. It's like you don't understand until you live it for a little bit. Like, you try it out, people. Drive FSD for longer than 10 minutes. Try the car out. And you're literally charging at home for less money. I don't understand why this is a discussion. It makes no sense to me.
No, for the people that cannot charge at home, it's a problem.
That's true. You're right about that.
Problem. That's the thing.
Supercharging is.
Do they have to advertise or not?
But
yes, of course they do.
You think supercharging is a supercharging out on the road.
Well, you're not saving as much. If you're supercharging, there's really you're not saving. The whole point is you save a lot of money too if you're using an
But
EV.
you still get the benefits of all the benefits of having an EV plus the the maintenance savings. So
did you guys see that list of the Model Y is the lowest maintenance car amongst ICE and EVs? Did
even
you see that?
like a Camry or something. Number
the
2.
only thing I've changed so far on my Model Y is the window washer fluid. Okay, so that's the extent of it.
I haven't done much to that either. I'm thinking about getting some new tires, but I might just rotate them. But
It's hard to explain it to someone like Chris, even Amit. I think Amit, you tried it a little bit with me, but like you have to really just live in the car for a little bit and understand why it's just better to. It's literally like having an iPhone or having a BlackBerry. Like in the beginning, everyone loved BlackBerries. First of all, nobody thought there was anything wrong with them, and then all of a sudden, you have an iPhone in your hand, and by version 3, nobody wants a BlackBerry. That's it.
Well, we did a little, right? Amit, didn't we do a little on the way to Kevin's house? We did it. We did a couple.
Yeah, it was autopilot. It wasn't FSD, but it was still a beautiful experience.
And it was just driving us. And then you sort of, we both started acting like passengers at a certain point. It's funny how that happens.
I remember in the car, I was just like, why would anyone buy another car when I was in that drive for like 2 hours?
Yes.
That's the thing. You have to get into the car, and that's Tesla's job as well. They have to attract people, get their butts into the seats, sell them the car. We know about it. If it's the best car in the market, more people should know about it.
It was the best-selling vehicle across.
It was
in the world.
Can you do it again?
All right. Can they do it again? Sure. But what that's doing is that's saying, oh my God, the Chicago Bulls just won the NBA, but can you do it again? It's like you just won the fucking NBA. You know what I mean? You won the finals. Like they were competing with all the other companies, ICE and EVs, all the other startups that advertise and do all the things that people say Tesla should do, and they were still number one. And so I hear what you're saying. Obviously, you have advertising, you raise awareness, but it's clear, like just looking at the data, it's clear that that's not necessarily needed right now to move volumes, right? So to me,
0% financing might be.
That would be. They're doing that in Germany. I was telling Cross.
In Germany, in Ireland.
Germany. Yeah. How are they doing that? Are they eating the spread?
Because it's lower. I mean, I don't know how high.
Well, I think they're lowering rates. They're lowering rates faster in Europe than over here, right? Isn't that what's going on?
Yeah, but 0%, dude. It's 0% in Germany right now.
Yeah, but if they're modeling it, yeah.
Yeah.
Anyway,
I mean, if interest rates drop in the United States this year already, so that could definitely help them.
Mm-hmm.
One thing is, if Tesla keeps pumping, dude, the market's gonna pump. Nvidia's up after hours. Like Tesla pumps another 5%.
Tesla, if Apple reports tomorrow and it's good, then
Apple's
you
next
basically
week, because the S&P has gone up this year, even though Tesla and Apple got fucked this year, but the market's gone up. So Apple next week, if they pump and Tesla pumps, maybe the market pumps back to 530, 525.
I mean, Apple just announced something with regards to their Vision
Pro. They have
Pro.
this weird. They never do an event in May. They're doing this weird.
They never. That's the thing. They never do a fucking event in May. So I responded to you. That's going to be a fucking AI iPad with some AI hardware in it, like maybe some chip or something, the neural chip from the fucking Vision Pro, and then that's going to.
The Vision Pro shipment got cut by 50%.
Oh yeah, they're projecting 450,000 versus 800,000.
Oh, they're projections for the units.
I mean, that was obvious. That the Vision Pro's a dud. That was
wait. How many units?
I do like when you say that.
Fucking stupid, dude. The whole fucking concept of goggles on my head is like the fuck is.
Now you're taking it too far. All right?
No, it's not, dude. It's it's not succeeding. I'm saying it right now. Vision Pro is not gonna succeed.
Meta Quest 3 is quite good.
Meta Quest is, and in fact, they're opening up their store. I don't know if you saw that. You can now get the operating system.
Horizon OS.
Horizon OS will be on other devices that are built by other manufacturers. So I think Rangu once said they don't make OSs. Well, now they're making an OS that's going to be another app. Even if it's
here's the thing: Gen 2 and Gen 3 can work, but they've got to find a use case for it. Like as Carl says, there has to be a developer app that works on it.
Well, that's the reason why the Vision Pro's not selling. Is that it's the developer
no use case.
What it comes down to is the developers, and so you need to get the developers on board, and they're taking longer than Apple expected, which is one of the reasons why instead of pivoting from the productivity side, they started going more to like the movie watching experience. But I do think that it takes time. I think it's going to be more like the Apple Watch ramp, than it was the iPhone ramp. Let's say it wasn't an overnight hit. I think it needs a couple of iterations. But and maybe we discuss this on Thursday on next thing. This new thing, right? So Meta's opening up the OS, and they're basically trying to be the Google of VR, right? So they're trying to say we're going to be the Google of VR, but Google is the Google of the space. So the question is, and with technology like this, you usually end up getting a number one and number two, and everyone else is a close third. So Apple's going to do their own thing, and then you got Meta and Google. Is the VR war Google against Meta with Apple doing its own thing?
I'm sorry, what is Google doing that's out right now that everybody's using? What are you talking about? I don't know what's going on here.
What I'm saying is they're trying to take the space that dumb.
I know what you're saying, but Meta's obviously the winner in this right now. I don't know if Google in 10 years has a better product, but right now Meta's killing it, like absolutely killing it in VR.
I don't think Google's going to win in VR. I don't think Meta or Apple are going to win dramatically in VR unless they make this Gen 2, Gen 3 version usable for everybody and we use it every day besides our phones. I don't see that happening for a while.
I mean, the Ray-Ban glasses are pretty cool if you get access to Meta AI.
Yeah, but would you use them every day, dude? Would you use it, put it on your face?
If you're using sunglasses or regular glasses, yeah, why not?
No, dude, you think these glasses are going to be super high-tech computer?
No, they have the Meta. He's talking about the Meta glasses. He's not talking about the VR goggles. He's just talking about like where you can talk to Meta AI. Did you see those? The Ray-Bans?
Dude, I'm not going to talk to myself like where's the latest ice cream
You talk
store?
to yourself all day long on the internet,
That's
okay?
right.
Literally to yourself.
That's right. No, there's people in the chat. These are real people, right? They're not bots.
They're all bots.
Guys,
I'm not bullish on wearables.
If you're a bot.
I'm not bullish on AI wearables. I just don't see the market for it. But maybe I'm wrong. But I just don't see it going. Dan Ives and Gerber are on CNBC. Do you want to watch them, or you guys want to leave?
Yeah, throw it on real quick, and then we can go.
Okay, here we go.
We lost Neil.
Is Ross crying now?
Let's see. Here we go.
Dude.
Knows where it's going. Robots. I'm just going to say robots over and over again. Let's take it to our leadoff panel. Joining us on set tonight, Wedbush Securities Managing Director Dan Ives and Gerber Kawasaki President and CEO Ross Gerber. Dan, first to you. Numbers were, I was trying to be polite. I said less than optimal, maybe less than Optimus, what I should have said. Phil kind of laid it out. What was your biggest takeaway for the quarter?
Tesla needed an adult in the room, and Musk was the adult in the room on this conference call. The big thing, the most important thing is that they are not going just straight to autonomy. A Model 2, a sub 30K vehicle will be out, and that's accelerated. And that's music to the ears of the street. You went in, investors were expecting a disaster and another comedy show conference call. Instead, you actually have a pilot on the plane navigating, and it's not Ted Stryker.
Nice airplane reference. Ted Stryker. Ross, what was your biggest takeaway from the quarter, from the guidance? Anything that, I mean, investors like it, but the stock has, I don't need to tell you, has been in a rut the last number of months.
Yeah, I agree with Dan. Elon did a, Tesla, what I call Tesla Elon, which is the Elon that people like in this call, which was definitely necessary. And he certainly didn't poo-poo the idea of having a $25,000 or less model, which is irrelevant of the financial deterioration of the overall fundamentals of the company. So I think if you look at Tesla, like robots and robot cars, and obviously thinking that this is going to happen in 12 months is probably a little bit aggressive. And we all know that Elon's timelines are usually 3 to 4 years aggressive. But that said, that vision long-term is wonderful. It's just the transition to this and what it will look like financially. It seems for sure that shareholders will be sacrificed for mass adoption of EV vehicles. So profits and margins that we expected on Tesla will continue to probably go lower, even though volumes might go higher.
Ross, back to you, because you posted something on the Elon Musk-owned X today, and you said, here's the problem. The problem is that Tesla is not making money selling cars anymore. Right. Now, I'm going to ask an insane question, because that's what we do. Why not, right? Which is, do they need to make money selling cars? And hear me out. Number one, you got all the credits, okay, selling those. But GM and Ford, they need to make money selling cars because that's what they do. And if they didn't do that, then there is no GM and Ford. Tesla is not them. They've got the AI infrastructure. They've got the Optimus robots. They got the robo-taxis. They got all the other stuff coming. Is there a, quote, razor blade model on the Tesla automotive side where they can sell cars at cost and still make billions, or no?
No, and I look at it as like the Apple model. Apple purposely doesn't give away phones, even though they make a ton on services. And if you look at Tesla's services revenue was up 25%. So it's a very similar model, but should Apple just give away iPhones to make sure that everybody has an iPhone versus making the 40% margins and being one of the most valuable companies in the world? So once again, as long as Tesla shareholders are fine with a much less profitable version of the company, then this vision works fine. But I think, there's a difference between owning a Tesla and buying a Tesla and being a shareholder.
I disagree with Ross in terms of what he's talking about, saying that this is not important. I mean, because I could argue Tesla over the coming years could be one of the biggest AI companies out there. And look, for Musk.
Yeah, but Elon said he's not going to build it unless he has 25%. That's the problem.
Yeah, but again, if you look at this conference call and how he laid out the vision, Ross, and obviously all the criticism going in, if there were 5 things that he needed to show, I think he showed all of them. I actually think investors, and I've heard from some, come out of this conference call viewing Tesla dramatically different than the train wreck, and we've talked about it, that it felt like the last few months. And again, it goes back to finally there was an adult in the room.
But
Musk
Dan,
stepped up.
you're discounting the end of the call with Martin resigning, and you and I have been working with Martin for a long time, and he is the glue in management and shareholders and investors, and he continues to lose seasoned top executives during this really important transition, and I find that to be concerning. Despite what I do agree, the vision he laid out is one that we've invested in and hope happens, but it just seems like there's this talk and vision, and then there's this like reality we're seeing under it, which just doesn't look anything like the talk.
Yeah, and I think now it's really approved me going forward in terms of for Tesla. But if you look at how they've laid it out with the vehicle, the sub 30K being accelerated into next year, the FSD in terms of laying out the AI vision, I believe right now you have just dramatically bad news baked in for what I believe could ultimately be a company that's worth $1 trillion, $1.5 trillion, $2 trillion when you look out in the next 4, 5, 6 years.
Yeah, listen, Ross and I have talked.
All right.
I like this price target.
Man, Ross should just go back and lose money for his clients. Seriously, just shut up.
Yeah, there is something. Look,
I'm going to jam after this conference call, by
fund
the way.
was cranking, right? If he was making people money and his fund was cranking, you'd be like, how is he getting so much airtime when he's got very, very little Tesla, and he's also
Did Ross also buy Rivian too, like Gary, or no?
he's buying
Oh, he did?
No, he was in Rivian early. I
Yeah.
think when Rivian was quite high.
Oh man, he was in it when it was 100 billion. Jesus,
70 billion. I don't know.
Anything to get on TV. So, I
Right,
mean,
yeah.
these are the glasses.
Okay, you can
Oh,
record us
nice.
right now. That's cool. It looks
do
nice.
you use them? Do you use them?
Yeah, every time if there's sun out, you can listen to music, you can make calls, video. Why not? I don't need earbuds. The music is great. By the way, the sound is incredible. These weigh like I think not even 3 grams heavier than usual Ray-Ban glasses. So
very cool.
Yeah, pretty cool.
All right. This was awesome. I think we had 3,500 people at one point in the stream. So thank you for being here. To the 1,300 still here. Thank you all. Vitaly, Carlos, and Couch Investors' Twitters and YouTubes are going to be in the description. So please make sure to follow them there.
Close to 40K on YouTube.
We do have a Discord too, by the way. I don't know if Neil does, but me and Carlos have our own Discord since we got some people in the stream. Freelancer Finance, and just look it up. We're also on Twitter.
Let me just put these in the chat. So here's Couch Investor. He's close to 40K. So if you guys could subscribe to him, he talks about pretty much every stock and it's great analysis. We got that one. And then what else do we need? Freelance Financer. Let me put that one here.
Thank you.
And yeah, appreciate you guys, man. This is really cool. I know we're not the biggest Tesla channel in the world, but I mean, the other Tesla channels, we're on par with the people that decided to show up to their streams versus show up to our streams. And I appreciate it. It's always cool over the internet for thousands of people to just listen to a bunch of guys who aren't, the smartest people in the world try to analyze and break down what's going on.
Thanks, man.
Like, you guys are smarter than me. You guys, look, you guys don't know how to get 7.
Neil, did you hear what he said about you?
You guys can't get 700% in 2 hours. Okay, so I was trying to
I'm
think of
used
light
to
on
it.
you
I'm
guys,
used to it.
but- No, but we're dude. We're all. It's a fun community, dude. We're all at the end of the day. This is all fun community building. This is as serious. It's not as serious at the end of the day. Like it's just we're covering the stock market. And
You're
yeah,
right.
the money
Here's
goes up and
here's an
down.
Amit joke. It's not as serious. It's as XM.
Oh boy.
That would be.
I wouldn't have even done that. That would.
Of course, it's not as serious as that.
Warren Buffett would love it. Warren
Warren
Buffett would be a big fan.
But it is humbling, dude. It is humbling for people to come and listen to your thoughts. I know a lot of people just found out about us for the first time today, and they liked Vitaly's abrasiveness. They liked Carlos's analysis. They liked Neil's analysis. Like they stayed for a bit and listened to us.
I like the new Chris.
Okay.
Can you get a new hat? Though we need a red hat.
Yeah, the days Chris can't make finance junkies, we need to just ping you, Neil, immediately.
I mean, the last time I was on here and Chris was here, he was pretty bullish on Disney.
That's true.
That was a while ago. That was a bit ago.
Yo, when Elon said go F yourself to Disney, Tesla went down 40% and Disney went up 20%.
Yeah.
So literally the delta between
This is what I'm saying. So whenever we talk about like the PE, the range, the ratios, the spreadsheets, and all, it's like, dude, at the end of the day, it's heavy emotional. It's emotional.
It's heavy emotions,
It's
right?
so much emotion. The numbers back up your emotion, right? Like the numbers like confirm your bias.
And dude, the numbers sucked, but it's all emotion and fun, and that's it.
No, there was a stat that came out not so long ago, like literally a couple of days ago. Retail participation when the market was extremely red was so low, and I was like, oh, it's 2022 all over again. Because back then, bear market, retail just left.
Yeah.
A shame.
Fun, man.
Well, it's not a shame. We want him, Neil. I think me and you want him gone for a little bit longer, maybe another quarter. That wouldn't be that bad.
Yeah.
Also, real quick, because she just came in the chat, shout out to Kelly. It is her birthday.
Happy birthday.
Today.
Happy
So
birthday.
happy birthday to Kelly.
Happy birthday. How's the virtual date tonight coming?
It's good. Well, we'll see. We've done a bunch of virtual dates for like months
I mean,
now.
he has a virtual gain of $200.
Dude, if this Tesla option actually, Tesla has to go to like 170 for me to profit, or some schmuck has to buy this shit for me. How many? Hold on, let me check the open interest real quick.
Just sell it on Robinhood overnight. There's some schmuck there.
Just ask Vlad to buy it from you. Ask him.
Dude, what schmuck is gonna buy this from me? Buy, call 185. There's 7,000 of these open right now.
Well, you got to mess with your bid and ask to make sure yours gets. You got to risk like a penny here or there to get it.
5-cent spread, yeah.
Yeah. So you got to play it. But what's the theta on that right now? I want to know how much you're losing on theta.
It's gonna, yeah, it's like negative 0.18.
It's like bleeding.
But Tesla keeps going up, dude. We need to get to 170. Get me to 170, Elon. We're gonna fucking pull this off. This is gonna be a 20x on $15, dude. This is gonna be
pretty good. I hope you get it. All right, guys.
All right, thank you, everybody. We'll see you guys tomorrow on the market open. Bye, everyone.
Bye.
Have a good one. Good
Bye-bye.
night.